All right, guys, in this video, you're going to witness a live LEA call. Now, inside of LEA, that is our 12-month group coaching program, and we run 10 coaching calls a month. Now, I run our Monday call every single week, and it's been a long time since I've shared one of these publicly, so I'm pulling it out of the archive. It's about 90 days old, so it's not brand spanking new. You'll see we've blurred out all the parcel numbers or any really kind of secretive, pertinent information, but I want to give you guys a sneak peek of what a coaching call looks like inside of LEA. I think they're pretty darn special. So get comfortable, buckle up. I think you're gonna learn a lot in this video, and hopefully will give you a little more confidence in your decision to go all in on your own land business and maybe even all in on LEA. All right, guys, good to see everyone. We got a bunch of people in the waiting room. Let's make sure we get them on in here. Happy belated Father's Day to all the dads out there. Shout out to you guys. I didn't have the best relationship with my dad growing up, but hey man, parents do the best they can do. And I'm excited to be a dad myself, honestly. Not anytime soon. I got a few more years until that's on the to-do list for me. But anyways, guys, we've got a great call ahead of us, a lot of ground to cover. I do have a hard stop at 6 p.m. PST. You guys know I normally never do. Today's one of those rare days that I do. This background is about to change here in the next 2 weeks. This will be a completely different background to my last 2 weeks in this house. And then it'll be, I don't know, some kind of tropical background in Bali. Also put it in the chat. Who's going to the supercars and land event? I think it's in about 2 weeks in Colorado. Let me know. I know some of you guys are going. Put it in the chat. Linford's going. Sweet. Jerry. Nice. Mike, you going? Mike V? Oh, you're talking about being a dad. Different kind of thing. Yeah.
No, I can't make it out there, man. I just got a little weird news about Vegas. I'm hoping I can make Vegas too, because I got something going on about 4 weeks before.
Okay.
Hopefully, it only lasts 2 weeks because I'm booking that trip and I don't want to miss it.
Yeah, man. All right. Fingers crossed. Fingers crossed. You got enough time to figure it out too. That's the real one to make it too. It looks like Dan's going to be there. Should be fun. Allegedly, I was volunteered to lead a hike or something. I don't really know. I have gotten zero details on it. They said they're going to do it like super early in the morning. I don't think anyone wants to hike at like 5 a.m. And it's a pretty far drive to any of the hiking trails. So I'm trying to put together like a post-event run or maybe like a sunset hike for some of the folks that are going to be there after the event. Because I think the event ends at 3, so I'll have plenty of daylight. That sounds a little more fun than driving an hour to go do a hike at 5 a.m. with probably like 5 people show up or something like that. All right, guys. Well, I'm going to share my screen. We're going to get things kicked off. Preston, you are first on the list. And this is, there's 2 Prestons on this call. Preston Drake, shout out to that mustache, man. That thing is just legendary.
Thank you.
That is Texas. Just fucking goddamn. That's awesome. But yeah, not you, Preston, different Preston. Preston, you submitted 3 deals. So we have a lot of deal reviews that were submitted. So I'm going to pull out what you think is most relevant here out of the 2 deals that we want to review. The third one is in regards to a subdivide that we reviewed last week. Sounds like it was the exemptions that we thought it was in Michigan. And you're pretty damn close, to be honest. Like, I think if you can get this down to, it doesn't even have to be 70K. I think that there's a world where this pretty easily sells at like 160. I would buy this deal anywhere between 70 to 80K. But honestly, there's a few different ways we could structure this deal. So if this lady gives you a ton of pushback, you can't lock it up. You can send me an email. I'll have one of my team members get on the phone with her and we could try to pitch her on like an owner finance deal or maybe some kind of partnership angle, but you're really damn close. Offer price was 94. Dude, you're super close. So anyways, Preston, thank you for getting the details on that. But the first 2 deals you submitted, so one in Wisconsin, it's 2 deals in one, and then the other one's a smaller lot also in Wisconsin. Which one do you want me to go through? Here in Las Vegas, October 11th, 12th, and 13th, we are hosting the biggest land investing mastermind of all of 2024. Hundreds of land investors, a star-studded lineup of land investing speakers, coaches, and even folks that aren't even in the land space that are going to come and shift your perspective on what's possible in 2024 and beyond. We've got a few more tickets left for general admission. We're 100% sold out for VIP. Go to landinvestor.co/mastermind and grab your seat.
Let's do the first one. We don't need to do a second one.
Okay, cool. So this one's got a pole barn on one of the lots. It's 210 acres. They accepted 70K for one of the 10s, right?
That's correct.
Okay. And what do you think that one's worth?
Probably 110. I'd say
Okay.
probably 100. maybe 100 to 110.
Okay, cool. And then that second lot, is it adjacent?
It's not adjacent. It's a couple lots over. They all belong to him, but he only wants to sell that one right there.
What's
So
up
there's
with this
this
recent
one.
sale information?
Yeah, he didn't. He said that's weird. He said he's had these for 15 years.
It's possible. I will say Wisconsin and rural states like this, like the recorder's information can be googly garp, especially on data tree. So this might not be accurate, but I would go look at the assessor's website or recorder's website and see if you can go pull the last transaction.
Sure.
But yeah, it might be just a mistake on data tree. Okay, so we've got this 10 acre here, and then which
And the
one is it? This
other
one over
10
here?
acre, just a couple lots over. The
This
other
one right here.
square right there. Yeah.
Okay. So one's got a pole barn. What else has it got going for it?
Supposedly it's a really nice pole barn, has a concrete floor and everything, and yeah, it's pretty nice. A realtor told him he could sell it at 150, so I think that's insane, but I'll try to talk him down. Maybe we can talk him down if we're gonna tell him we're gonna buy both lots.
Mm-hmm. I mean, I don't think the realtor's estimation is insane. I think 150 is that's probably pretty on the money, but him selling it to you for 150, well, that might be insane.
Yeah.
Why is he not listing it if he wants to get top dollar, or is that even what he wants? Hey guys, I want to let you know that inside of Leah, that is our 12-month group coaching program, we have added a 6-figure guarantee. That's 6 figures in gross pipeline profit in 12 months, or we will work with you until you get there. Now, that is not a guarantee that you will hit 6 figures in pipeline profit in 12 months. No, that is a guarantee that we will get you there no matter what the timeline is. Might happen in 3 months, might happen in 6 months, might happen in 24 months. The guarantee is you get to plug into our system, which is essentially a business in a box for land flipping, and we'll scale you to 6 figures together. And if we don't do it in 12 months, we will work with you for free until you get there. There is no offer out there that provides a guarantee like this. Will it be challenging? Absolutely. Will you be tested? Absolutely. But if you think you've got what it takes and you're ready to build a business that changes your life in 2024 and beyond, I want you to go to landinvestor.co/apply.
That's not really what he wants.
Okay.
I mean, he just, again, this is one of those leads where he's just not using this land. So the other portion, he has a little cabin on it and a bunch of acreage that he hunts on, but these 2 pieces, they don't really do much for him.
Okay. Have you made him an offer on the one with the improvements?
I have not yet, no.
And he recognizes that you're not going to pay him 150 at the very least, right?
Yeah. I told him that we couldn't do that, but he might want something close, so a little bit closer to there. I'll try to talk him down.
Are you looking to take this down as a double close, I imagine, just given the spread on the first one?
Unless we can get a deal for both of them. Because he is
close on them? You would close on them if you would try to bundle them together. Seems like you're pretty far off on the first deal. So I reckon even if we bundle these, that they're both going to be a double close.
Yeah.
I think it's going to be pretty damn hard to get them to pull down as much as you're asking for. So 70 on the first one, let's call it 100, somewhere in that territory. One of the cool things is in Wisconsin, I think this is just across the state, you can, if you're going off after the exemption subdivides, I forget what the rules are, but you can take these down with no survey. Like it's literally, you just jot up some paperwork and record it and that's it. You might be able to take them down to like 2-5 acres or something along those lines. I don't think it's going to swing value too much. I think 150 seems a little optimistic on the second lot, just given some of these comps that are pretty damn similar. I'd say probably in the territory of 135, 140. If I were to make this guy an offer, shucks, I don't know. If it's a double close, probably the most I would pay him would be 150, 170 for both. He probably jumps at that. There's a solid 60 grand of spread there for you, somewhere in that territory. I think it's going to be really, I mean, if you already pitched him on 70K for the first deal, it's going to be pretty hard to get him down on both lots for a cash close.
Yeah, that makes sense.
On the one with the one with the pole barn, what's the utility situation? Hey guys, I want to let you know that I've released a free Chrome plugin for land investors. It's a comping tool. It's going to save you 30 minutes to maybe even an hour a day with your comping on sites like Redfin, like Zillow, like land.com. It's amazing. Our team and I have been using it for over a year, and we've got over 600 folks that are using it every single day within their land business, and it's 100% free. Go over to landinsights.co/Chrome.
No water, but yes to electricity.
Okay. Yeah, I think 150 seems pretty optimistic. I'm pretty familiar with this market out here. Even 110 for the 10 acres seems optimistic as well. Um, so yeah, man, that'd be my lowdown on that deal. Any more questions on it?
No, that's it.
Okay. Go make
Thanks.
that offer. And for everyone here too, when sellers hit you with this malarkey of like, oh, my realtor told me X, Y, and Z, we nip that in the butt right then and there. I don't let that slide. I like really create a dividing line of like, well, A, why didn't you sell then? Or why don't you go list with a realtor now? And then I also present a case as to the value that we bring and how we're never going to get them close to that offer. Even if I'm not going to pitch them on what we would pay then, I feel like a lot of people kind of kick that can down the road and then they have this really uncomfortable conversation in the final hour when they go make that offer. But I'm just planting seeds the whole time. Like, I'm an investor. I'm not going to pay you a real retail price. And when I play that game with them too, they start to show their cards. They start to tell me why they didn't list with a realtor when they got that offer a year ago, or why they're not going to list with a realtor now. And that gives me ammunition to stay in the game. Otherwise, you can get spooked. And I see a lot of times land investors are their own worst enemies. They try to overqualify leads that they think, oh, there's no motivation here. They're just reading into it too much. So I like to get those little clues to keep me in the fight. It's really half the battle, honestly, is just staying in the fight. Anything in particular that you want to know on this last one, or you feel pretty comfortable with the 1.6 acre, Preston? What's up, guys? I want to let you know that my team's put together a ridiculously amazing webinar, and we are releasing it for free. If you want to get access to it, it's over at landinsights.co/unfair. It's all about creating your unfair land investing advantage, how we're using data and AI to build an unfair advantage where no one can compete with us, how we are getting deals in the best markets, how we're getting deals that no one else is getting access to, how we're creating super accurate offers for our marketing, and how we are removing 50% plus of all of the waste within our marketing to 2x our ROAS. If that sounds interesting, go to landinsights.co/unfair.
I feel pretty comfortable with it. If I may ask, so say for a first deal, he's kind of, I think he's kind of expecting a cash price. So should I even pitch the cash price first, or should I say, oh, we should double close this right here and you'll get the money that you want? Because I feel like sometimes when I talk to people and I pitch them both things, they get a little leery about the double close, because then they kind of realize that, hey, it's not just me signing it and setting a title and me getting my money.
Yeah. Did you mail him at 70,000?
Yes.
Okay.
No. I'm sorry. I mailed him at 49. So
Gotcha.
that's the price I wanted.
Okay, cool. Yeah, then I mean, in both cases, I'd always make the cash and the double close offer. What order you make it in could shift a bit. But in this case, I would just go, and again, as soon as it comes up in that conversation, I'm not going to go into my full offer pitch there, but I am going to plant those seeds. Hey, look, if we were to go that high, I would have to run it by the team. And honestly, we're probably gonna need a lot more time to close, like 3 to 6 months. Yeah, I'm just planting those seeds. So when we get to that negotiation table, he's already aware. Like, I've already set the frame. It's a lot easier to have that conversation. Honestly, the
Right.
fact that you're getting pushback on the double close, I mean, look, it's not for everyone. There are sellers where it totally does not make sense for their situation. And if that's the vibe I've gotten from our initial call, I'll tell them that. I don't think this is the right fit for you, but I'll put it out there. One of the things I do too, I think framing is everything in sales and talking to sellers. I frame the double close as if I'm not even really suggesting it to them. It's almost like, sometimes on occasion we've done this thing, it might work here. It feels like I have no dog in the fight trying to pull them one way or the other. It's almost like the best way to raise money is by going and asking someone if they know friends that want to invest in deals. It's kind of the same angle that I take with sellers. And so I feel like people get really anxious and nervous and they try to sell them on the double close. And so more than anything, it's probably not to be mean, but it's probably a you thing more than the inherent difference of like double close versus cash. A lot of these sellers, dude, I mean, it's probably 1 out of 10 that we talk to that have like impending doom that they need to sell this month. It's very, very rare,
Yeah.
but it does happen. And if it does, I'll preface, hey, I don't think it's the right option for you. So yeah, I mean, double closes are obviously a very fine line to walk. It's very tough to get it right. You don't want to mislead. You also don't want to overshare. Again, I really go back to the idea though of I need time. I'm going to run through my kind of checklist of due diligence. We're also going to be able to work this deal through our network of both retail and what would I say? Retail. What did I say? Retail buyers and list of investors. I forget how I phrase it. It's inside of Leah though, our little phrasing for that. And I say, you know, on occasion, that might mean that we have to get boots on the ground. Sometimes our realtor will walk the property. Is that okay with you? And more times than not, they're like, dude, I don't care. So long as the timelines make sense for them. Hey, I want to let you know that Land Insights is opening up seats. If you don't know what Land Insights is, it is our AI platform that allows you to go and aggregate all of the counties, all of the zip codes all across the US to find the hottest land investing markets. It'll also allow you to see all of the pricing insights, all the prices that have sold within the last 3 months, 6 months, 12 months, and then give you interpretations based off how you should be pricing your offers, show you if pricing a blind offer in a given market is even a possibility. We have a Genie scoring system, which shows you how homogenous the pricing is within a market. Essentially, it's the greatest thing that's ever been invented since sliced bread for land investors. It even has a feature that'll scrub all of your data, remove landlocked, flood zone, all the junk properties you wouldn't want to market to. It does it all. It skip traces your properties. It'll find you realtors. It'll edit your drone photos. It's bananas. And frankly, if you don't have access to this in 2024 and beyond, I think you're getting left in the dust. Go to landinsights.co/apply. Come hop on a call. We will show you exactly how this tool works A to Z. See you inside.
Okay.
What I would do, Preston, though, and look, I was going through this before the call, and I got kind of a little bit of a download. And you know, obviously, we had our conversation a couple of weeks ago. You've rectified. You're on a roll with, I think, going back through your pipeline and really working everything.
Mhm.
And I just want to clarify too, I think that your underwriting has been very good. So I know you're submitting a lot of these deals for review, but I want to make sure that I make it known that your underwriting and how you break down these deals has been really strong. So I want to make sure that you've got my blessing there. I think the area that we wanted to work on that we have improved on, but you know, an area to continue to focus on is being able to like read between the lines with sellers and find that little kernel of motivation that keeps you in the fight. Like we've been talking about, you know, leads not coming on a silver platter, yada, yada, yada. And then potentially how we make the pitch, right? And this is a game that like it's very much it's a sport. I mean, like literally all morning I'm going through listening to calls from our team in our land business, and the offers they made in the last week sucked. They were doing terrible. I mean, like it's a game that requires constant monitoring, both for yourself or for folks that are doing it on your behalf. But I just want to give you accolades because I feel like you've been going through and reviewing a lot of these deals, and your underwriting so far has been pretty airtight. So I just want to give you kudos there.
Thanks.
Yeah.
Yeah, I mean, I'm so close. If I can get one contract a week, I know I can make this work. I just have to.
Oh yeah.
I got leads. I just keep following up and I just keep working them. It's a job.
Yeah. Yeah, it is very much a job in the beginning. And you've got when we talked last week, 2 contracts so far?
Yeah, 2 contracts so far.
Okay.
So one the last week before that, and then one the week after that. So
Sweet.
Hopefully
And
another
then-
one this week.
Yeah, I was about to say, anything kind of brewing in the in-between stage?
Not really right now. I mean, there's a crazy deal that Dennis and I went over, and we also went over on Monday. But it's kind of a home run deal. We'll see if we can make it happen.
Nice. Okay.
But I'm pulling out all stops. I'm sending gifts to people. Like,
Yeah.
I'm building rapport with these people. It's just can we agree on the right price? Like one thing that I'm encountering a lot is people very rarely want to sell when your offer is less than what they paid for the property. And Dennis and I were talking about this, and he said, yeah, it's pretty hard. That's the one objection I have a problem with, because I call it the bad investor objection, because especially if you're a dude, you don't want to feel like you spill the milk on your family's money. And that's the situation I'm encountering.
Yeah. You should explain to them what the sunk cost fallacy is.
Yeah.
You're better to go take that L and go and reinvest that money elsewhere. But I would say, I don't know the actual stats, but I would say at least 40% of the deals that we do, folks are underwater on them. So it, you know, maybe it is a harder pitch, and that makes sense. And it's always something we look at before we get on that first call with the seller. But I don't let that stuff get in my head and spook me too much. I just like to have as a frame of reference, and I just go about my business. But yeah, man, just to put a recap on this one, go make the offer on this 20-acre here, right? And one of the things that, again, I was just going to go back to this. I was going through our CRM today, and it just boils my blood, but it's a never-ending game. And I see this both for people on our team and inside of Leah. Dude, when a seller tells you, no, that price doesn't work, like, you are just getting started. The game is just going. So, A, don't go make your highest and best out of the gate, which I think is probably like 170 here as a double close. Go
right?
park it at 142.5 or some oddball number like that. And now you're
Yeah.
going to volley. You guys are going to go back and forth. And that back and forth could go weeks. And
Yeah.
what boils my blood is I see my team where sellers say, hey, I'm entertaining other offers. And they're like, okay, sayonara, see you later. And that's the luxury of having too many leads.
Yeah.
And sometimes having less leads and just being so resourceful and like taking everything to its furthest logical conclusion it's a real skill set. And you have that when you're scrappy. And I think you're actually in the situation, not to go and rant too much, but you did get a good amount of leads out of the gate. And so kind of going through and imagining, hey, what would happen if you didn't get any other leads? Like going through and just taking everything to the furthest conclusion. And sometimes that furthest conclusion takes a year to put together, but I don't think this deal
Yeah.
will. And then this last one down here, I mean, go give her a range 70. I'd say a max of 80,000, somewhere in that territory. See what
Mhm.
she says. I reckon that she's going to play ball with you and probably take it somewhere in the middle. If she doesn't, send me an email. I can have my team help out.
Sure. Thank you very much, Sumner.
Yeah, of course, man. All right, on to the next. A lot of ground to cover here today. A lot of deal reviews here today. All right, Gary, you on the call, Gary?
Yes, I'm here.
All right, another Michigan deal.
It's the same one actually that we talked about last week.
Okay.
Just had some more speed bumps on it.
Gotcha. All right, fill me in.
So we subdivide. I'm trying to subdivide it and make the lot usable. So I can subdivide it into 8 different lots. The issue that I'm running into here is the road access. So the road, St. Pierre Street, is private, and this is a plat from 1927. The township does not really have a playbook of how this is supposed to like proceed. So they're kind of, giving us some BS about what needs to happen to move forward here. And what they're saying is that every property owner that abuts up to St. Pierre Street needs to sign off on approving us to use that road.
Mm.
And then in addition to that, what you're seeing here on St. Pierre Street, it goes forward and then it's supposed to be 60 feet wide, but it's not. And then as it goes, from where the shape of our lot kind of thins down or gets wider and then goes up north, it's supposed to cut down from 60 feet wide to 30 feet wide. So the road doesn't conform. So I don't know if the road, if they'll approve of usage of the road, and I have to get approval. So my question is, is it worth going down this rabbit hole? And by the way, to present all this, to submit something to the township, I have to get some attorney who's going to draft a road plan and all that.
Yeah. Just an attorney or any engineers involved? Do you know?
I guess technically it doesn't have to be an attorney, but it just needs to be somebody who will draft a plan.
Okay. Yeah, you're probably going to need, I would think, engineers to help sketch this together and go put together kind of a preliminary outline for the city. This is for the city, right? Or is it the county?
Township.
Okay. That would probably cost you $1,000, $2,000, somewhere in that territory. It depends. I mean, I just got a quote for $50,000 for some engineering work that seems pretty simple to me, like a survey and a preliminary sketch. So I mean, the price can range wildly. Honestly, that's not so difficult. It definitely could fall flat on its face and they could say no, but I would still probably take that step. But before I take that step, I would want to go and see, okay, can I get approval? Like, can I even reach these people? And when we say St. Pierre Street, is it literally every property that abuts St. Pierre Street?
So if that's another thing, so when I ask clarification questions, like these township people, like they don't give any explanation. And they have an attorney who's not on staff who they won't let me talk to, and they just he's getting billed by the hour, or they're getting billed by the hour. So they're just having phone calls and they're relaying this half-ass information to me that I don't know how to I don't get any clarity on any of this stuff.
Yeah. But you have asked the question and they just haven't answered.
Yes.
Okay.
Yeah. She
Dude,
did just repeat herself and just say every property owner that abuts to this property. So it looks like there's a lot of parcels, but some of them are owned by the same people. So there's actually 8 parties.
Right. Have you tried reaching out to any of them? And do you know what you have to get? Is it a certain document that you have to get signed? What does that look like?
So I also asked that, and she just said that it has to be a document that is recordable that they sign. That's the only. That's the only information I've gotten about that.
Gotcha. Okay. Well, dude, what I would do, I mean, that is confusing as all heck, and I don't necessarily have the answer what instrument you're going to use, or if they're going to even approve it once you get the engineer involved, which I imagine is who you would use in this case. But my first thing is like, let me just go get a litmus test and see, like, if I call at least a person, are they even remotely interested, or is this going to just be like staunchly rejected? Because we could do all that other work just to find out these people don't want to play ball, and I guarantee you, they all know each other, so. They'll probably tell you, hey, look, if we don't mind, but old Ransford down the road, that's the guy you got to watch out for. Like, you should be able to kind of get a pulse on the scene out here, which they might be totally against it. I mean, to be honest, if I were this guy Ransford here and I knew there's going to be 8 subdivided properties behind my lot, I don't know if how much I would like that either. So I think there's a good chance that people dig their heels in or want compensation, and it just gets really messy. I think my thesis kind of is still the same as it was in the beginning. I still think, what is this worth as a flip? 140, 150? I forget what we said. 120, 120.
Well, so now that I've like gone further through this, like,
Yeah.
you know, that value might be different because like there's no, like the, you know, the county won't be able to, you know, give you approval to even get to the lot really.
Mm-hmm.
Like it's one thing to buy it, it's another thing to actually start
Right.
construction, like, and you know, the county will come in and say, oh, you don't have approval to use this.
And we can't use this little platted road here.
Well, so to get to that, that's another question I asked. To get to that, you have to get to St. Pierre Street, so you still need the same approval.
Oh
from
my
these
goodness.
people.
Oh God.
Yeah.
And is the seller willing to double close? I forget.
I haven't talked to them about it.
Yeah.
Yeah, I haven't thought about that.
Okay. Yeah, man, that is tough. I mean, if there's no access as a flip, who knows what this thing is worth? Well then, dude, I would still proceed. I always keep my chin high and pretend like the deals are going to work out until I hit a major roadblock, which so far this just feels intimidating, but there is no major roadblock yet. If serious money gets involved, which I don't think there would be, then I might have some pause, but at this point, it's just elbow grease. So I would start by I can look at that. It's so stupid. They're not going to give you clarification. Let's imagine it's all the properties that abut this lot. You think that's fair? Or
That abut that road, St. Pierre Street. So
okay,
going
it's a whole road.
Yeah,
Well, dude, yeah, what we could do, how long do you have on the contract?
they're pretty flexible and reasonable. And I've actually, you know, to try to get clarity, I had the sellers actually call too,
Okay.
and try to get clarity that, you know, so I'm working with them.
Okay. Okay, cool. And the seller wants you to cash close and then you're going to subdivide this. Yeah.
Yes, but I thought it was a pretty big opportunity. I didn't even think about double closing it.
Yeah. Well, I was
yeah.
going to say, as a total alternative, since they're willing to play ball, you could just say, hey, look at this deal is messy AF. Here's what we're going to do. You bring the land, I bring the skill, the elbow grease, we JV this puppy. If they get their 60 grand, everything in excess, you split whatever, 50-50 or whatever the split is, you get to make that up.
Yeah.
Very little risk in the deal for you at that point, and then you can go through all the minutia and spend a couple grand on the engineering work, and that's it, and just put in the time into the deal. Unless they're willing to give you a ton of time and we can get all of our T's crossed and I's dotted beforehand with the access, which might take a long time. I would obviously not close on it before then. Anyways, what I would do from off the jump is let's just go get a litmus test. Let's just go call a few of these people and just go get a read. They're going to give you a pretty good lowdown. I guarantee this is a small town where everyone knows everyone on that street, and just explain the situation. And then if we get a read on it, I might proceed with sending out a piece of mail to all the neighbors, opposed to and probably pairing it with a cold call. What you're going to run into, it's really difficult. Same thing with creating easements. People just don't pick up the phone from a stranger. So you kind of have to triangulate. You like text, maybe I drop them an email. I skip trace them, get their email, drop them a letter. I think that's going to be your hardest thing to do if people are on board with the idea, which I really think I think this guy over here is probably not going to love that idea. That's just my hunch, but who knows? That's true. Now, if you do get access, you chop it up into 8 lots, you think 250 is a cakewalk. Yeah.
I think so.
Okay, cool. Yeah, that's what I would do, man. That's a really weird deal. It's a tough deal for sure. Tough deal in a lot of ways. This is not my ideal subdivide at all. But if they're willing to give you time or they're willing to partner in some way, I could be convinced to keep on going down that road until I hit a major roadblock.
Got it. Okay. Yeah, I'll start with some phone calls and hopefully, it's positive.
Yeah, and dude, when you're having that conversation, when you go back to the seller too, you're gonna possibly present multiple options. You'll probably bring your findings to them. You could also just say, look, there's a huge risk factor in here. I don't even know if we can get access. One thing that would be great though if you give me the right to show the property and play matchmaker, I could try to pair someone up while I'm doing the work here, and maybe we can just get the deal done before we even do all the subdividing, which is a win-win for everyone involved, and just get a read if they're even interested in that. Being that they're so open to play ball with you and they know it doesn't have access currently, I don't think they're going to say no to a double close as a contingency plan, as a worst case scenario. I don't really know what the hell this thing is worth though as a double close.
Yeah.
Probably more than 60, probably not 120 though, but probably more than 60, I would imagine.
Right.
I mean, maybe this Bosch company back here wants this thing. Who knows? This is a huge parcel.
Right.
So, anyways, man, any more questions on that?
No, that's it. That's good info. Thank you.
Sorry I didn't have more alpha on that one. That is a weird deal, everyone. That's a tough one. Okay, so I'm going to go through these questions for you, and we can kind of fill in the blanks.
Thank you, sir.
Strategy selection in newer markets. Trying to consciously move business into more profitable deals. Desired sweet spot is between 150 and 350K. Trying to move away from feel it out first and see what works. All right, I'm going to say one thing here, and this might be the wrong advice. This is just my humble opinion. I see this a lot in land, but I also just see it in business in general. I have a good friend who runs a coaching business for fitness. Okay. Business was doing well. He's probably about a year in. They're doing 8,000, 10,000 a month. That was a big deal for him. He was working at a chemical plant in Louisiana before. So pretty big come up, right? And then he gets this idea of I should start charging more. I'm going to start doing fitness coaching for CEOs, raises his price to $15,000 for 6 months of fitness coaching, which is like, there's an absurd amount for fitness coaching. And his business has taken like a 75% nosedive in the last year for revenue. So I do think that I am cautious of people that want to go so big, so fast, especially if we don't have either a nice nest egg sitting away, or we're thinking about like just getting rid of all of our small deal cash flow. What I like to do is I like to do both personally. Big deals, and Preston could probably speak to this. Preston does big deals. It's lumpy. I mean, there's dry spells, it's like, it's really nice to have that predictable income coming in that allows us to take those big swings and chase bigger opportunities. So I just will say that just to preface, don't burn the boats, like keep what's keeping the lights on and then still allocate some money and some time for doing bigger deals. That'd be my 2 cents. Now starting to move away from the feel it out first and see what works. What do you mean by that?
Well, look, that's great, Sumner. Context setting here is I've mailed maybe about, I'd say 6, 7 states, and I've got maybe inside of those 6, 7 states, there's 2 or 3 that are my favorite states, if you will, and maybe 2 or 3 counties there, right? And how I found them is feel it out, right? Send a mailer and go with a wide range, 3 to 100 acres, some cases even more than 100, but most of the deals come in around 50 acres, 40 acres. There's 3 or 4 acres. Obviously, that's a lot of it's bread and butter type stuff in the 10-acre range as well. So it's kind of like send the shotgun blast and see what works in what county. Now I'm maybe getting too structured to your earlier comment, right? And what's kind of the genesis of all this to give you and everybody on the call a little bit of background is on the plane ride back from Florida, I cracked open a copy of 10X is easier than 2X.
Yeah.
Right. Yeah. And right now, just full transparency with all you guys, 650K paper profit, 80 of that has been realized, 6 deals in.
Wow. 650K pipeline?
Pipeline profit. Whew. Right. But I mean, look, I'm a skeptical guy. You know that, right?
Yeah.
I'm like, show me the money, right? Show me the money and the wire transfer first, because some of those may not pan out. I mean,
some won't. I'd say it's probably still $500,000 that gets realized if I had to guess.
Well, look, and that's it, right? So look, there's 2 deals that are 6-figure deals. I don't know if the broker, and now the broker's kind of in it, and I'm hearing from the broker, everything was hunky-dory and it's going to be a slam dunk and not a big deal. And now the property's got access issues, right? So it's like the story changes. You guys, nothing you guys don't already know. So look, at 650 on paper, that's good. I'm skeptical. I'm wondering, one question for you is how much of that do you think is realistically convertible? I know it's a hard question to answer, but 650 is where I'm at. And I hired my VA. Me being on vacation last week was really good because I did beginning end of day. She kind of took the reins and ran with about 80% of what I gave her, which exceeded my expectations. And I would have been happy with 60%. So with all that VA in place, I'm going to be pounding the phones. And I will admit the last 6 weeks have been tough for me because I haven't spent time on the phones as much as I like to.
Mhm.
And I feel I get this internal anxiety when I'm like, you know what? I'm not spending enough time on the phone. The business is not going to go where it needed to go. So to correct all that, I'm putting a stretch target to say I want to get to $1 million in pipeline profit as my immediate goal.
Okay.
And that's kind of what's leading to some of these comments. So that's just a little bit of background for you.
Yeah, yeah. In terms of my guesstimation, I mean, dude, you're a smart guy, you're conservative, you've been around the block. The percentages are so wildly case by case for person to person. People inflate their pipelines all the time. I don't think that's your style, obviously. I do think also it does depend on the quantity of deals that spread out. So if you told me 650Ks spread over 2 deals, maybe half of that comes through, or maybe even less. But I'd say, if it's how many deals that spread over for the 650K?
16 deals, 6 have sold.
Okay, cool. Dude, I would say 80% probably gets realized in the next 8 months, 10 months, something like that. I think it's pretty fair. Sans any like major crazy value add or crazy hair on deals that you have to go through. Not that you can't get through that, just can take a lot longer, obviously, to get done. Okay, so just to go back to the sweet spot too, you said 150 to 350K. Is that list price for these deals, or that's where you want to be acquiring, or is it the profit you want to make?
That's what I want to market value sell at.
Okay.
So my profit rough numbers would be about half that, or 40% of that.
Okay, cool. Yeah, I mean, the stuff in like the 250K and under is definitely still in flip territory. As you start getting up to 300, 400, 500K, you got to know those markets pretty well, because there's probably going to be some kind of value add element, and value add can come in all shapes and sizes. Maybe it's unlocking value because you've got a great probate attorney and you're like really plugged into that market, or you're doing subdivides or fill in the blank. Like again, I'm gonna pick on Preston, but Preston's one of those guys that's moved from flips and pretty quickly moved into value add stuff. I don't know how many markets you work in, Preston, but I think the natural trajectory is everyone works in a lot less markets as they start doing the value add stuff, because a lot of the value is knowing the market really well. So you're probably gonna, if doing deals that are in the 350K and beyond range or slightly above that, like that's definitely going to be a real element that you have to bake into your process, into your consideration. You're going to do less flips, and it's going to be lumpy too. I mean, like you don't get 6-figure spread deals every month or even every week, or definitely not every week, but definitely not even every month, depending on how much marketing you're doing. So I would still keep the lights on with the base hits. 10X is definitely easier than 2X. And it's funny because everyone does talk about, in this business, doing a big deal is just as hard as doing a small deal. And that is true up until a certain point. Up until a certain point, like this whole business model of buying discounted land really starts to fall off. It's like a bell curve, you know what I mean? Like it doesn't really, I mean, it does work, but it's just so hard. It's so damn hard. So 10X also does have something to do with quantity too. There's a few folks out there that are going to do 3 deals a year and make a couple million. They are anomalies. And usually they have some kind of inbound deal flow edge. They've got a community that brings them deals, realtors that bring them to, like, they have some kind of edge that most people aren't going to have. If you're just doing direct mail to go get big 6-figure, multi-6-figure, 7-figure deals, it just is damn near impossible. It'll happen, but it's really hard. And one of the mistakes I made 2 years ago is the same boat that you're in. I said, okay, we're doing a couple hundred deals a year. I can't sustain doing double this. It's going to be impossible for me. So let me just go way up in price point. And it just didn't really work. So now we're kind of in that middle ground still. Now starting to move away from the feel it out first and see what works. I mean, ultimately we can never really get away from that for working in new markets. But the beauty is, you've got, how many states have you worked in?
About 6 or I'd say 6 or 7. Core states, probably 2 or 3.
Okay, 2 to 3 that you love, right? Like,
yeah.
Okay, cool.
Yeah.
Dude, that 2 to 3 states, I mean, that is a multi-7-figure business. So if you want to remove some of the risk in your early marketing, like just double down there. Dude, there's people doing 7 figures in a county in this business. You know what I mean? So it doesn't take a lot. So if you want to mitigate some of the marketing risk and have the edge on the value add, just go deeper on what's working, opposed to trying to spread out, with a ton of different markets. That's the only thing that we can do, though. Again, I still think the majority of the risk in this business is in our new marketing campaigns. We can't ever mitigate all of that. Does that make sense?
Okay. It does, and it's very helpful, as always, Sumner, because I was going in the other direction. I was going into, I got to fan out. I got to go into other territories, right? But you're kind of telling me, if I'm hearing you right, you're basically saying double down in the adjacent markets of where you know what works, right?
Yeah.
And reading between the lines, you're probably also saying try to use the same or similar brokers and similar title companies. Obviously, that helps a lot.
Mm-hmm.
So stay in the core states, and even if it means that I'm not going after grade A inner ring of the bullseye counties that are, high SDR markets and primo from a land insights perspective, go to tier 2, tier 3. That's okay.
That's okay.
Um,
There's a
am I
point where
hearing you right?
yeah, you are. There's a point where it's not okay, of course. Like there's got to be some kind of line in the sand, but the scale's tipped by the resources that you have and the business model that you have. So if you're a pro at subdividing in Tennessee and you've got all the resources there, do a tier 3 market's a tier 1 market to you because you've got such a real edge. So there's a lot to take in consideration beyond just the sell-through rates, but there's definitely a point that I wouldn't go past. Even if you know the state and have the resources, there are shitty counties out there I probably would avoid. But dude, even beyond that, and you do want to fan out partially in those states, and you probably will still do some new campaigns. You don't want to turn off your new marketing entirely, but the percentages flip-flop, or probably the majority is going to be remarketing or kind of fanning out in these states. But even, dude, even to keep it simple, you can continue doubling down on the counties that you've already marketed to. Like it's not like people think it's taboo to market too frequently. I know people that market every month to the same places.
Really? Okay.
Oh yeah. I mean, at that point, they're usually stacking multiple marketing channels, so direct mail might not be the first touch, so it's cheaper. But yeah, I know people that they never let their foot off the gas, and sometimes it's even just in a city or a zip code. You know what I mean? Um, there, as you know, and I don't want to beat a dead horse here, but there's such a timing component to our marketing. There's so many people on your list that you reached out to that never got your letter, or they got it and it was the wrong time, or yada yada yada. So I think for most of us, quarterly is typically what we recommend, but you can even push it a bit, especially as you're opening up texting in your business. Isn't that right? Yeah, texting or cold calling?
Well, no, I did cold calling. I put that on pause because I was not impressed, right? I was just like, I just felt like it was just a lot of time on the phone for almost no result, right? And maybe I screwed up. I picked the wrong county to start with, right? But I'm what I'm doing right now to answer what I think is the question behind the question there, Sumner, is I'm just going to double down on all of this. The numbers I shared with you on my 10 deals that are remaining and the pipeline profit I have up until now has basically been done on less than 6,000 mailers per month.
Wow.
Right. So my next thing is to try and get to 10 to 12,000 mailers. Now that I have my VA kind of doing the middle and the back office stuff, I'm going to be Mr. Acquisition Manager and front office guy to kind of double down on that and just crank the engine to where we can get to a 7-figure kind of pipeline profit and then hire an acquisition manager. That's my stretch goal for myself over the next maybe 3 months if I'm lucky, 6 months if I'm not. That's kind of what I'm thinking.
Yeah. Dude, that's amazing. That's insane. When did you join Leah? The winter of last year?
On November.
Okay, so November, average out 6,000 mailers a month. Dude, those are banana stats. What do you chalk it up to, just for the folks that are watching at home? Is you think it's you on the phone, or how analytical you are with your marketing or your pricing?
I think it's two things, right? I think it's really, really being very systematic on pricing mailers, and then having some logic on, the core markets, and the 5 to 40 acre gets priced a certain way. As you get to 40, 60, 80, 100 acres plus, the percentages need to go up, right? So you want to capture the top end of the market as well. That's kind of mailer pricing strategy 101.
Yeah.
That's one. Number two, just an animal on the phone, man. I mean, you just got to pound the phone, right?
Yeah.
People call them, do the triple dial, right? And then the follow up, and call them in 15 minutes. Even if, like now I got my VA, when somebody calls, if I can't get to them, my VA just makes a relationship call. Thank you for calling. Austin's going to speak to you day after tomorrow or tomorrow, whenever it is. Is there something specific you want us to make sure we bring to the table when we talk to you? Right. So that's, again, borrowing a page from your playbook. But also being able to understand what the motivation is, being able to deal with the objections. And then I think the underlying principle on the phone is, if I feel like I'm pitching, I'm pushing with a rope, right? Mm-hmm. I got to get them to where they are walking into the solution, and I'm just kind of coaching them along. Mm-hmm. That's when I know it's moving in the right direction, right? But if I'm in Mr. Used Car Salesman mode and I'm trying to pitch them, I'm swimming upstream and I know it, right? So it's that click of when you kind of, some of the things, a lot of things you said, which is, I'm not going to pay retail, and we don't do that. And, we are very selective. And, you kind of want to get them to where we're not a fit for everyone, but we are for some, and we will move quickly. And I always talk about the fact that we've got 100% success rate in deals that we've signed, which is true, knock on wood, until now. And you get them to where they're like, all right, these guys seem legit. Let's get towards joint solution. I think those are the two things: pricing well, and number two, getting them to where they're jointly constructing the solution, where they're talking 70% of the time, and we're just coaching them along.
Boom. That's it, man. There's the common denominator that I've seen across the board. It's not so much for like where folks end up long term, because we all have our own journeys and there's skills that we need to pick up along the way to get us to where we want to go. And I really do believe everyone will end up where they need to go. It's just like for some people it might take 5 years, some people might take 5 months. I think your results are uncanny given the timeline. Some people just kind of walk in with skills that are really well suited for this business. And the two skills that I've seen as the common denominator are actually, it's not even pricing, believe it or not. I mean, it's important, but the two things are, it's exactly what you said. You're an animal on the phone. It's not just like we're an animal in terms of being, like you said, a used car salesman. It's just like we take everything to its furthest conclusion, as far as it could possibly go. Like they've got to tell me to fuck off and block my number till I ever give up showing up. That's a really hard thing to instill in a team, though, as lead flow starts to balloon, because people just know there's always another hot lead coming their way. That's been a hard thing for me to instill in our team and keep them on track. They do really well and they drop the ball. And then on the same vein too, it's like when we have calls to the sellers, like I'm tenacious to get them on the phone. Then when I'm on there, I don't give a shit what direction they go. I'm just presenting facts. And I'm very clear that I'm not for everyone. Like if you're for everyone, you're for no one ultimately. And so, yeah, it's exactly what you said. And those are the two common denominators that I find serve people really well in terms of how quickly can they scale up or how quickly can they, build a business that's substantial. And some folks that's a little more challenging. It just takes more time to pick that up. So that's good stuff, man. The results are bananas. I have no doubt that you'll get to 7 figures in pipeline this year, which is nuts. We already answered that question. Yeah, go ahead.
Sorry. Go ahead, Sumner.
I was just going to read the second question about the infill lots.
Go ahead.
Okay. Certain brokers suggesting more urban counties with 1/4 acres to 4-acre lots deviates from how we built our business, but I'm being told rural markets are sitting longer right now. So may go into newer counties in familiar states or adjacent to familiar states. Yeah, dude, it's like I always talk about inside of Leah, two things. One, there's a lot of ways to skin the cat in this business, a lot of ways to make money in land. And two, in the beginning, do not get cute. Like in the beginning, just follow what's laid out. But you're at the point where you've got a little bit of house's money to play with. You can place some adjacent bets, kind of pun intended, in your business and see how they pan out. You might find out that you love infill lots. And there's nothing wrong with that business model. It's not what I love. I don't think it's a great place to start. I think the due diligence is pretty rigorous. The margin for error is much more thin there. Just dealing with less space in general. There's only one use case. Yeah, I don't know the infill market that well. I don't know. I don't think it's booming right now, but I'm sure there are markets that are booming. Definitely, there are a lot of rural counties that are completely flat. I mean, look at a lot of Texas, right? Flat in a lot of places. There's just a lot of supply out there, but there's still many rural counties that are booming as well. That's why land insights exist. So I wouldn't make a blanket statement that somehow infill lots are outbeating rural market. It just probably depends on the state or the county even. But I think as a generalization, I think rural recreational is more steady than infill, especially with like the interest rate stuff. That kind of leads into your next question, the interest rate stuff and the election and I've only been through one election in this business, 2020, right? And I was pretty much an absolute noob at that time. So it didn't really affect me in any way. I'm curious to see how this plays out, not to get political, but this is obviously a landmark election in a lot of ways. Interest rates are kind of crazy right now. So yeah, I think it will have an impact. I think the impact that I foresee is almost like treating it like a holiday. Like that month might almost be slightly off limits for aggressively marketing. Because I think people are going to be checked out in a totally different world, not thinking about selling lands and maybe even kind of biting their lip, waiting to see what's going to happen in terms of just like the seller psychology. So I might even treat it like a Christmas and like pull back marketing substantially. The interest rate stuff, I can't really speak to it. I'm a total novice there. Business is still humming along, so just keep close tabs in your KPIs, and stuff starts to veer in the wrong direction, I'd course correct. But I think the only thing that I could forecast would be probably dialing back marketing during the election month.
Okay, so treat it like November, like Thanksgiving, obviously.
Yeah, like that whole month might be kind of taboo. But what I was going to say is I feel like infill lots would be more affected by that, because I think people are concerned about what the outcome of this election is going to be, and they're probably not thinking I'm going to build a house because I want to see what's going to happen next. Interest rates might go crazy and it's really hard to get financing, or it just doesn't make sense. So I feel like if there's an area to be hit, it would be the infill market, but I don't know. What do I know? That's just my 2 cents. But data doesn't lie. I mean, of course, there's latency with the data in this business, but it's not, the latency isn't so extreme that you can't see the writing on the wall. So you don't see ginormous swings one way or the other in land. It's pretty steady. Real estate in general, but land in particular is pretty steady, Eddie. So like you're already going to see some of the writing on the wall for a lot of these markets, I would assume. I've been in one market where the rug kind of got pulled out from us, and it was an infill lot, and it's because interest rates went crazy overnight and people couldn't get bank financing. But I've never had that happen on rural land. So just a
Okay.
little FYI.
Thank you for that, Sumner. I mean, look, yeah, the punchline here is, are you basically telling me, look, as far as house money, right? I haven't gotten wires in, but there's 2 deals that are in contract right now. Once those close in the next 30 to 60 days, I will be in the black. I'm not in the black yet,
Okay.
right? Although I've made money on paper, with the pipeline profit,
Yeah.
obviously. So there's still stuff that needs to spool up and come to fruition to where I can really say, now I'm feeling confident about things, right?
Mhm.
So it is what it is. That's just how I'm thinking about it. Your basic overarching comment to me is, in general, yeah, maybe you can play with infill a little bit, but don't mess with what you're doing right now. Just keep doing more of what you're doing. Focus on the same counties, focus on the same states. Don't venture out too much and get too adventurous right now. What seems to be working well for you, just keep doing more of it. Am I oversimplifying, or is there, what am I missing there?
You're
if I
not
was to
missing
summarize?
anything, dude. And I think a lot of people actually miss what you're hitting on, which you're not missing anything. Ultimately, I think business is just a game of collecting data and trying to make objective decisions off of the data. And when you have a subjective realtor whispering in your ear or this random impulse that you should try this new thing, I'm not saying don't do it, but more times than not, it's not what's going to make you money in the here and now. The data tells you what's working. Just do more of that. I mean, business is so simple in a sense. Like once you have some data, just do more of what's working and cut the rest. So keep on doing what's paying the bills. But if you want to experiment, you could in a very small way. I'd dip my toe in the pond. But I really recommend for everyone here, don't try to reorientate your business overnight to be the subdivider or the big deal person or the infill person. Just dip your toe in the pond. See if you like it. See if it works for you even, That's my 2 cents. So both yes and no. You are in a place where you could experiment, but if it were me, I probably wouldn't. I would just double down on what's working.
Yeah, you don't want to pull on the yoke hard right, hard left. You want to make small inputs to where
Yes.
the passengers don't freak out, right?
Yeah, yeah,
That's kind of
exactly.
the approach here. So when you say value add, though, just help me understand. That is, how are you defining value adds? If I look at that, is that probate type stuff, or what would you
Yeah, I mean, I think
what's the sub bullets there?
yeah, totally. I think the classic definition by land standards is like minor, major subdivides, entitling, rezoning, yada, yada, yada. I don't even think about it from that perspective. I go kind of a layer beneath that, which, yeah, probate to me, adding value. Quiet title, adding value. Creating access, adding value. Fucking clearing the property of shrubbery, adding value. I mean, there's a lot of ways to add value. And a lot of times, like, dude, creating an easement where an easement doesn't exist and giving legal access can have a huge return on the deal. It could play out almost like the return that you might get from subdividing in terms of like a multiple of what you could sell that deal at. So I think there's a lot of low-hanging fruit that we often miss. One of the things I've talked about this before, but one of the things I'm focused on this year is how do I get better at fixing messy title deals? Because I've always just kicked those things to the wayside, and the seller's like chomping at the bit to sell, and I've always just been like, I don't want to do them. I'll just go do a subdivide. But there's just a boatload of cash sitting in our CRM just because of my ignorance. So we're doing 2 probate deals right now. Definitely one of those things you need to be, and I'm not a probate expert, but you need to be plugged in with the right probate attorney, ideally someone that's going to get paid out of closing. And then all you got to do is just find that one person and then you just keep on using them over and over and over again. And there's no hit to you up front. Maybe you pay a small retainer, but small, and they get paid out at closing.
Sure.
So yeah, same thing. I mean, getting affidavits. There's a lot of things that we could do to add value to messy title, but title, legal, and then kind of physically actually breaking down the property to smaller lots or entitling it or rezoning, what have you. That stuff though is like real advanced. And honestly, it's so sexy and kind of fetishized in this business, but it's not everything it's cracked up to be. It's also, it can kick you in the face real hard, real quick. So for everyone here, start with the simple stuff first, like creating access, doing maybe an exemption based subdivision, something real simple. That'd be my 2 cents. So yeah, a lot of ways to add value in land though.
Thanks, Sumner. I'm actually doing 3 of those things already: probate, quiet title, and clearing already.
Whew, there you
I
go.
appreciate it.
You already added value, man.
Yeah, I didn't know that. So I'm glad to hear that I'm already doing that. But thank you all. Thanks again for all your input. Very helpful.
Yeah, I'll hit on this last one here too. So Other suggestions to keep in mind as we develop 2024, 2025 go-to-market marketing strategy. Man, I could tell you came from corporate America, man. You got all the business jargon. People on here are probably like, what the hell is go-to-market? Not adding subdivide entitlement yet, as our thinking is to add acquisition manager first on the business model first. Spin up 10 to 12,000 mailers a month, then add texting, cold calling. Note, not surprisingly, we are noticing we are spending less time spent on dud, thin margin deals with more mail volume. That's awesome. So other suggestions keep, I mean, dude, the recommendation I'll make for you is probably different than what I would say to myself or to someone that's more seasoned or from someone that's just getting started. For you, it's pretty simple. What you need to build ultimately is this marketing flywheel. And we need to start adding multiple marketing channels to get more list penetration for the data that you do have. But to do that, we need people. So you already kind of have the hiring blueprint. We've talked about this, but AM in the business, you already got a generalist VA, texting manager. I slot texting in front of mail, kind of go through that sequence there. I don't even know if I would add anything else to the mix other than maybe as your kind of internal list of leads really starts to build in your CRM, I might think of some ways to make sure that we're always touching them. So I might add in internally like RVMs to that list, or getting like a triple dialer and having a VA dialing those people in your CRM, because you're going to build up a monster list of leads, and 1 AM or even 2 won't be able to get to all of them. So how can we go, 2 marketing channels to go touch more people from the same data, and then a way to touch people at scale for those in your CRM. And that just requires people ultimately. That's it. I mean, pretty simple, honestly. That's the good news about this business. It's pretty simple. Not easy.
The recommendation is texting and add more scale for, touch points on lead nurturing. Is that basically it?
Yeah, for the marketing stuff. Yeah, texting. So I go texting. I'd probably do a 2 follow-up sequence inside the texting platform, then move the bad numbers, non-responders to mail, and then I'd probably end there, and then I'd have a process for marketing, kind of remarketing to those in our CRM. There's a lot of ways you can do that. Dude, you could retarget them through Facebook ads, PPC. You could do triple dial or RVMs. There's a lot that we can do just to make sure that we're keeping engagement high for those in our CRM.
Okay, I know we've gone long on this, Sumner, but we could talk about this at another call, but when do you think I will have when do you think I should be, what's the critical mass point after which I say I want to start, I should start looking at adding text messaging and add more people to do, acquisition management. When do you think I'm at that point? Or do you think I'm already there right now?
Yeah, that's a good question. I think I could probably make up some line in the sand for marketing volume or revenue, but honestly, I think it's more qualitative than anything. Texting does not work unless you've got a killer acquisition process team in place. Like, it just won't work without that. So the trigger would be you've got your whole acquisition process running smoothly and a great team member in there. And then that would be my trigger for adding texting. See, a lot of folks that add texting, they have no acquisition process, and of course it doesn't work. You are going to get more leads through texting, but they're going to be wildly less qualified. There's going to be a lot less trust built there. So you've got to have a great process to make texting work. And that's true with cold calling. That's why you probably hated cold calling, because you're like, oh, these leads suck compared to mail. And they do. And it's possible to make it work, but it's just a different game. Yeah, I mean, on top of that, just for you, I think you're already doing this, but for everyone here too, one thing that I think is just absolutely mandatory moving into next year is, and now, honestly, but in particular next year too, no more marketing to bad properties. Like, we are beyond those days. We should not be spending time with texting or RVMs or cold calling or mail going to the 45-degree slope, 1 acre on the side of a cliff. Like, that just has to be out of our data set. I think that's why a lot of people struggle with texting and cold calling, is it's a volume game, but 50% of the text or cold calls are going out to junk properties. You know what I mean? Whether you're doing it inside of Land Insights or manually scrubbing yourself, or you've got a VA, that data has got to be getting cleaned. I think it's super, super important. And it's just a really easy way to make our marketing more effective, especially as you're starting to push more volume and build out this whole kind of marketing flywheel. That's like the lowest hanging fruit for you and for everyone here. So just making sure if you're not doing it, do it. And if you are doing it, make sure it's done airtight. Perfect.
Excellent stuff, man. Thanks so much, Sumner.
Yeah, of course, brother. All right. Next on the docket, we got Dave. Dave, what's up, man? Here in Las Vegas, October 11th, 12th, and 13th, we are hosting the biggest land investing mastermind of all of 2024. Hundreds of land investors, a star-studded lineup of land investing speakers, coaches, and even folks that aren't even in the land space that are going to come and shift your perspective on what's possible in 2024 and beyond. We've got a few more tickets left for general admission. We're 100% sold out for VIP. Go to landinvestor.co/mastermind and grab your seat. Hey guys, I want to let you know that inside of Leah, that is our 12-month group coaching program, we have added a 6-figure guarantee. That's 6 figures in gross pipeline profit in 12 months, or we will work with you until you get there. Now, that is not a guarantee that you will hit 6 figures in pipeline profit in 12 months. No, that is a guarantee that we will get you there no matter what the timeline is. Might happen in 3 months, might happen in 6 months, might happen in 24 months. The guarantee is you get to plug into our system, which is essentially a business in a box for land flipping, and we'll scale you to 6 figures together. And if we don't do it in 12 months, we will work with you for free until you get there. There is no offer out there that provides a guarantee like this. Will it be challenging? Absolutely. Will you be tested? Absolutely. But if you think you've got what it takes and you're ready to build a business that changes your life in 2024 and beyond, I want you to go to landinvestor.co/apply. Hey guys, I want to let you know that I've released a free Chrome plugin for land investors. It's a comping tool. It's going to save you 30 minutes to maybe even an hour a day with your comping on sites like Redfin, like Zillow, like land.com. It's amazing. Our team and I have been using it for over a year, and we've got over 600 folks that are using it every single day within their land business, and it's 100% free. Go over to landinsights.co/Chrome. What's up, guys? I want to let you know that my team's put together a ridiculously amazing webinar, and we are releasing it for free. If you want to get access to it, it's over at landinsights.co/unfair. It's all about creating your unfair land investing advantage, how we're using data and AI to build an unfair advantage where no one can compete with us, how we are getting deals in the best markets, how we're getting deals that no one else is getting access to, how we're creating super accurate offers for our marketing, and how we are removing 50% plus of all of the waste within our marketing to 2x our ROAS. If that sounds interesting, go to landinsights.co/unfair. Hey, I want to let you know that Land Insights is opening up seats. If you don't know what Land Insights is, it is our AI platform that allows you to go and aggregate all of the counties, all of the zip codes all across the US to find the hottest land investing markets. It'll also allow you to see all of the pricing insights, all the prices that have sold within the last 3 months, 6 months, 12 months, and then give you interpretations based off how you should be pricing your offers, show you if pricing a blind offer in a given market is even a possibility. We have a Genie scoring system which shows you how homogenous the pricing is within a market. Essentially, it's the greatest thing that's ever been invented since sliced bread for land investors. It even has a feature that'll scrub all of your data, remove landlocked, flood zone, all the junk properties you wouldn't want to market to. It does it all. It skip traces your properties. It'll find you realtors. It'll edit your drone photos. It's bananas. And frankly, if you don't have access to this in 2024 and beyond, I think you're getting left in the dust. Go to landinsights.co/apply. Come hop on a call. We will show you exactly how this tool works A to Z. See you inside. Is Dave here? Maybe Dave's gone. I saw Dave for a minute.
I'm here.
All right, Dave. I figured you were here.
Sorry, I was like eating.
Oh, you're good, man. How are you?
Good. I have a story for you.
Okay.
Last week, I was talking to a seller, and I copied your double close pitch video from the module. You know, I copied it, transcribed it, and I read that to them like verbatim,
Yeah.
tone and everything. And they were like, "Okay, let's do it." And then that was Wednesday. And then Thursday, I had already called an agent like to help me with the underwriting. And so we got some listing agreements already signed. So Thursday, we listed it. And then Friday, we got a full price cash offer.
Oh,
like,
shit.
Like 3 days. I can't believe it. Like I think it'll close this week if they can get title done.
Bro.
So it was in Ohio and was like, a county where like some Amish folks are buying some land. And like, this thing was just like, a fat guy looking at a bucket of fried chicken, I guess.
What's the math on the deal, if you don't mind me asking?
Oh, it's like a smaller double close, but it was so fast and easy. I don't mind. Like it was like a buy for 45, sell for 65.
Dude, that's 20K of spread right there. I mean, it won't all go to your pocket after closing costs, but that's still a great little deal. Dude, that's a cool testament to the framing and the power of explaining double closes correctly. I always say there's a lot of people that could explain a double close to the same seller, and if their framing isn't correct and they don't know how to say it with confidence, the result is wildly different. So for those that haven't watched that, go inside of Leah. You guys can watch your double close module. That's a
I think you're wearing the same shirt.
And you're wearing the same shirt?
No, you're wearing the same shirt.
Oh, in the module. That's funny. My lucky shirt, man. Well, that's sweet, dude. I'm happy to hear that. That makes me smile ear to ear. Fill me in on this deal here. We've got this
This one
almost
was
16 acre.
property that I mailed, but they didn't respond to mail, but they did respond to SMS.
Okay.
And seems like a pretty, like, this area is someplace that I've recently found out is being bought up by developers and broken down. There's a lot of these 14, 15, 16 acre properties have sold recently, and they've been subdivided by builders
Okay.
into 1 acre lots. And so I found an agent who's been involved in a transaction or two, who built up a pretty good buyer's list because she was getting hit up after one of these lots that she had that went under contract. You know, she was continuing to get, response. So she's got like or seemingly she says she has a like a bench of builders, who might be interested in this property. But this one is seems like a pretty good deal. But it's a verbal contract at 45. They haven't signed yet. And there's pretty strong comps that are looking like the 120 to 140 range. I just want to make sure I'm not like overly optimistic,
Yeah. Dude, you're getting into your groove, man. I love to see it. Sending in more deals. Looks like you're doing more deals, which is awesome to see. My one reservation, I don't know if the agent spoke to this though, if this is going to be subdivided, was there any hesitancy with the access here? So you've got like kind of crappy dirt road access back here, and then obviously not a ton of width here. Was there anything that she said about that?
No, like we didn't get too deep into that question or not. And I was going to ask you about like, hey, if you spotted like a property that might be a potential subdivide, like who are the first two people that you call? Like a surveyor and try to get the county zoning code or the township and read it through, or like what? I know it's not really part of our.
Yeah. Yeah, I mean, the first thing I do is I go read the regulations for the county. So I just literally Google county name, subdivided regulations, scroll through those. It ranges. Some are 500 pages and really confusing. Some is literally it's just one page on a website and it tells you everything in very plain English. So depending on what you learn there, you may need to get clarification by calling the county. It's pretty rare though. Most times it's pretty obvious, especially if it's a relatively simple subdivide. So yeah, it's going to tell you everything that you would need to know, or at least just the broad strokes, especially if you're going to sell this vision to someone else. You don't need to know all the ins and outs on it. And I don't see any reason as to why this couldn't be subdivided. It's just probably not the ideal subdivide given dirt road access and the fact that there's not a ton of width here. And they're going to have to pull utilities back here if they want to build, more than likely. But it's not a deal.
Yeah, the only thing I saw was like, there is a neighbor with utilities right next door to the south, and the property did pass a perk test. So I don't know if it will park everywhere, but I'm hoping it would be one of these possible, these lots that gets used by a builder that I've listed the comps, that I put in there.
Yeah. Well, dude, I think the good news is regardless, this is a hot county and obviously a very hot state. And this is a nice piece of land. So even if this doesn't go to a builder, that's not your only kind of exit scenario. And I don't think we can look at the comps. I still think you're probably pretty close to like a 120, 130, even without a builder coming in. I doubt they're like blowing up the market and paying way over. They're just probably gobbling up more properties, which has inflated the prices a bit, I'm sure. But I don't think these guys are going to offer, 50% over what these things were already worth. The next step from there, if this is just going to be a simple subdivide, and you don't need like any real engineering work on it, I would just go call a surveyor and then get their quote, get their timeline. They usually kind of take care of all the minutia, recording it, all that jazz. Then you get the APNs from the county and you're off to the races for something that's simple. But again, you're not going to have to go through that process here. But for anyone that's ever curious, again, it all just starts with a Google search. And this stuff is almost always housed as a PDF online. And you can just go read it through there. The other thing too is a lot of times states are going to have common threads for almost every county. So like once you know the North Carolina rules, it can change. But you've got broad strokes that you can use time and time again. I still might look for clarification, but it usually doesn't change wildly from county to county. It can, but usually doesn't. So one thing to know. Okay, so this has had a perk test. Is that right?
Right.
Big value add, especially in North Carolina. That's a slam dunk. And then I'm taking everything's on well out here. Yeah.
Yeah.
Okay. I mean, dude, just that alone, and again, builders do crazy things. They don't always like follow a standard blueprint, but on average, builders don't want to go put in 16 septic systems on a 1 acre lot. Like usually the smaller acreage with septic is usually not their dojo. Now, 1 acre isn't so small that they wouldn't do it. If it was like a quarter acre, they pretty much never will, just from what I've
Right.
seen. But something to take in consideration. So these comps that we're looking at here, the one thing I'm immediately thinking about is, okay, were these also going to be on septic and were they going to be on well? And do you know?
No.
Okay. There'd be one thing to ask the realtor is like, hey, look at this is obviously a beautiful property. It's a rural lot, but if a developer were coming in and this was going to be on septic, it was going to be on well, and they're gonna have to cut roads in and yada yada yada, like, would they still be interested and would that take a price hit? She might not know the exact answer, but she probably knows, well, yeah, the other properties that we were sold had the similar utility setups. And if we're selling to builders, utilities, access, all that stuff becomes infinitely more important, and it really does affect their decision in a pretty
I
big.
talked to one agent today who was kind of like, he just really wanted to text with me. This wasn't the person who I ended up like really settling on, but he sort of texted me that he knew a builder that would be interested in this property at 6,500 an acre. I don't know if that means like he actually has a builder who saw it and wants to make that offer, or if that's what his like builder buddies are paying for acreage like this one kind of thing. So
Yeah,
it's interesting that he sort of spat that out as like, he's got a buyer at this price.
yeah, that is interesting. I would ask him for clarification. That seems so far under market value that maybe
That's
that
what I
was.
said.
Yeah, but I don't know. Maybe he's trying to get a good deal for his homie. Who knows? But I would ask him for clarification. So this lot here had city water, obviously city power, but this was going to be on septic, which the well stuff for water, depending what the water table is out here, not to go way off the weeds, but like that's actually more of a solvable thing. Like if these were on sewer and yours was on septic, I would be a little concerned how that was going to affect values. The water stuff's that's a little more solvable. If the water table is decent. So this one doesn't tell us anything. This
I
looks
know
like-
that was the guy. That was the guy I called with his builder buddy.
oh, this guy. Okay. This is
Yeah.
definitely more of a developer friendly property. Two-sided
Right.
road frontage, multiple access points, paved roads, already built up all around it with subdivision. So this one makes a little
Right.
more sense. And that traded at a premium of like 12K an acre. This one's over 10K an acre. And I hate how they don't tell you anything here. So I think that the first one was the most realistic, and this one's been cleared. And they don't tell you anything. Okay, so I think this is our most realistic comp. And honestly, the flora looks pretty similar. I don't know what they're growing, but yours has this going on with it too, whatever those fields are.
Our guy's got a soybean farm on his. Or
Okay.
he's leasing it to somebody, but they don't have a lease. It's just like a verbal.
Oh, weird. Old school, man.
Yeah.
If there's nothing in writing, you should be fine to proceed with that. This is far and away our best comp. So this sold in 14 days and then sold at 140. Yeah, I don't see, and this property sits really weird. This is like a long, skinny lot. I don't know if this sold to a developer, but this is a spot on the money comp for us. So yeah, dude, I don't know. I don't know if this sells to a developer, but I do know that this deal is going to sell in like the 130, 140. I feel really confident on that.
That's
So
awesome.
either way, it's a great deal. Long story short.
Thank you. Good to hear.
Yeah, and you got the little creek in the back too. This is idyllic, man. This is a beautiful property. So yeah, I would before you list with that realtor, I mean, I would ask for some clarifications on just the development points that we talked about. And once
Right.
you have it under contract too, you can tell her, hey, you could shop it around to your buyers too, and just get a litmus test from them before you. Is it going to be a double close or cash close?
I think cash.
Okay, so you could go and have her shop it around before we close on it too, as long as you have a contract and just kind of get a read. But yeah, I think this
Yes.
is an easy double your money sitch. Oh no, sorry, way more than a double your money sitch. I think this is a 120, 130. You're buying it at 45, so like a triple your money sitch.
Hopefully.
Ooh, it's a good deal, Dave. That's a good deal, man. Any more questions on that?
No, thank you.
Yeah, of course, man. All right, Arnell, you on the call?
Yes, sir. What's going on with you, man?
Good to see you, man. I'm gonna go through. So we got a lot of markets here. So I'm just gonna go through and give you kind of the quick and dirty on all of them. Is that okay? We'll just kind of rapid fire through these.
Yeah,
And
that's
I'll let-
cool.
Okay, I'll let you know which ones stick out positively and negatively. Okay. So Elmer County, Alabama. I actually just out of curiosity, Arnell, did you remove the off-market sales from these STRs, or were these pulled from Land Insights?
No, I don't have access to
Okay.
land. I know last time I came, I had the 5 acre filter, so I took that
Yeah.
off, and everything just cleared out right now.
Okay. So the one thing I would look at here on all these, we can just do it after the fact, but we're showing, for example, here an 11% sell-through rate. So one of the things that we do on Land Insights is that we remove the off-market comps, which on the MLS websites, for whatever reason, they still pull some of them. Not all of them, but some of them. I don't know why. The off-market comps are comps that did sell, but they didn't sell on the MLS. So we just don't know what the story was there. So I usually remove them. I don't know if this is off-market. So this was not off-market. So usually off-market's going to have no photo and it's going to have no list history. This has photos, they're just not loading. But the surefire way that you can tell is by going and looking at the listing history, if this will load. Oh no, this was off market. This was sold public records. So this is an off market sale. So if you see sold public records, I mean, this wasn't listed on market, which again, it still was a real sale that happened, but it can be really misleading, both from a pricing standpoint and a demand standpoint. And they don't pull all the off markets. They just pull some. I don't know why. So we exclude those from our STR analysis. So there's 3 off market comps here. So we had 19 sales. But in actuality, we had 16 on-market sales. So my ratio is going to be based off 16 divided by 168, just as an FYI.
Okay.
So that's going to slightly adjust the number. So that's one thing that if you're doing it manually, I always remove those off markets. If you're using Land Insights, you don't have to worry about it. They're already pulled out. It's rare, like in a case like this, dude, it's not going to make or break your decisions. We're talking about like a 3 comp difference, but there are counties out there where, no joke, 70% of the sales are off market. And there's like 2 sales that happened last month on market. And it's actually a really crummy county. And more than anything, if you got a deal there or you're trying to price your mailers, you'd have no accurate data to price off of. And that's the real danger. So just one thing to look out for.
Okay, cool.
This looks like it visually looks like a pretty good county. Definitely prices are going to swing. I don't know, you probably haven't looked at prices yet, but they are going to swing as we get to the southern portion of this county, as we're by Montgomery. Because you're in proximity to a decently sized town, like values are going to change relative to the northern portion. So anytime I pull up a county on a map, I'm just thinking about where's the diversity visually, where's the topography or the cities that are going to drive a swing in price. And I can kind of predict that before I even start pulling and looking at the data. This one might not be impossible, but just something to consider. It wouldn't scare me off from it, but I am going to go into it thinking, I always start with the acreage range for pricing, but I'm already looking at this and I'm saying that might not work. It may, but it might not. 5 acres down here could trade at 10,000 an acre and 5 acres up here could be trading at 1,000 an acre. And that's just going to make it impossible to use an acreage range. So in that case, maybe we divide this up via polygons or something along that case. Hendry, Florida. So this has got too much active supply. 378 properties is too noisy for my taste. I mean, look, rules are eventually meant to be broken. Like, you learn the rules so you can eventually break them. But in the beginning, we usually say 25 to 250 active listings. If we're in excess of that, there's just too much stagnant supply sitting out there. You'll see a lot of that supply sitting in these crappy little subdivisions. These are what we call defunct subdivisions. There's things that were subdivided a long time ago that have really not much demand typically, and you can do deals there. You can make money. It's just a slow turn, just a slow game, more times than not. And even if there is a lot of demand, like even if the sell-through rates are good, what happens is you put your listing up here, and a week from now, you're on the 5th page and no one's even looking at your listing because there's so much new inventory hitting the market. So 25 to 250 is where I try to hang out at. Again, as you scale up and get more comfortable, you can bend those rules slightly, but in the beginning, 378 is too rich for my taste.
All right,
Cedar, Missouri, 38 properties. This looks like it's probably a little more in our wheelhouse right here. Let's check this out. Yeah, I like this, right? Super rural, not super diverse, minus the lake. This is definitely going to have to be either excluded with a polygon, or you're going to have to take this out and price it separately. Anything within a few miles of this lake or anything that's even waterfront is going to trade at a huge premium, right? But these are the kinds of markets I love to work in, where it's just vanilla. It's just all the same. It doesn't really change much. These are my favorite kind of markets to work in. And these markets are sleepers, It's got almost 100% sell-through rate in the last 6 months. That's really strong. So just because it's a rural, vanilla, boring looking county doesn't mean that there's not a lot of demand there.
Okay.
So I like that one. That's probably my favorite thus far. Monroe, Tennessee, I can already tell you this is probably going to be a hard county just because maybe I'm thinking of a different county in Tennessee. I could be wrong here. Some of these counties in Tennessee are definitely tough, especially the ones that are kind of bordering metropolitan areas. This one actually doesn't. So I was getting it confused with another market, but there's a lot of really strong counties in places like Tennessee or North Carolina, South Carolina, and people pull these rural counties that butt up to Chattanooga or Knoxville or what have you. And there's so much demand for land there. You're competing with other realtors that are marketing to get listings, developer, like wholesalers. There's just a lot going on there. Sellers are getting blown up, and we can still do deals. I just find that it's an onslaught to take on in the beginning. You're going to deal with real savvy, real tough sellers, and it might take more marketing to get a deal there. Now that deal probably sells in, a week, and so the scales do tip. But in the beginning, I try to stay in the more tier 2 markets opposed to like the hottest markets out there, because your acquisition game has got to be real airtight to make that stuff work. I see a lot of people that take the market right outside of Knoxville, for example, and they have a really hard time. But fast forward 2 years from now, they might absolutely kill it there once they're a little more experienced. So, it's just like a video game. Ultimately, I don't want to go fight the hardest boss to begin with. You will be able to fight that boss eventually, but I like to start with the easy bosses to begin with. This is a fine county. This is going to have a lot of topography going on. So this is all very, very hilly and mountainous, and this is all pastoral, pretty flat land. You got a big valley here. So there's some undulation, but prices are going to swing a good bit based off that topography. And you're going to get a lot of deals back to you that have really weird topography as well. That's one of the things that we do inside of Land Insights is we look at the contour lines when you're kind of scrolling through your data, and you can manually scrub that stuff out. We're working on the automated scrubbing for contour lines, like based off of a percentage. But some of the stuff is just going to be ungodly steep, and I probably wouldn't want to mess with it. So just keep that, just keep that in mind. It'll also swing pricing a little bit. Markets like this, septic systems are really important. Will the property perk, things like that. So there's a bit of a due diligence element that you want to take in consideration. You don't need to know all that now, but as you get more seasoned, you'll start to understand what are the nuances for every state or every kind of sub-region, and you'll start to understand that. I find that the Southeast is one of the hottest places to work in right now. It's also one of the hardest places to work in. That's not to scare anyone off, but it's a hot, hot place that has some weird oddities that come with it. So just something to take in consideration. I really like for newer folks and even for myself, I like these markets. It's just my 2 cents. Okay, Carroll County, Georgia. I'm pretty sure I've either looked at this one or worked in this one. I can't remember which one of the two. 159 properties actively listed. Yeah, this is a sweet little market. These are the kinds of markets, again, I love these places. This is perfect. This is ideally what we want to see. You're still close to Atlanta, but we're far enough away where we're not going to be dealing with the all-out craziness of competition from, it's not even other land investors, just other people that are in the real estate space.
Right.
So yeah, my takeaways here, Carroll and Cedar would be my top picks. And you see that those don't necessarily have the highest sell-through rates, but they've got that kind of that balance of, we know they're going to be priceable. It's not going to be super competitive. Like it's just that happy medium. And so we talk a lot about sell-through rates because they're important, but it is just one dimension of the many dimensions to find a good market.
Right.
Also this Elmore, Alabama too, like while it's decent on the last month, it is a little soft on the 6 month. There are definitely better markets out there. Most of the markets we're working in nowadays are probably 70% to 100% STR every 6 months. And we're still able to balance that with rural markets that are very easy to price. So those do exist. So even if this was more vanilla, I'd still probably be slightly concerned. It seems a little soft for my taste.
Okay. So I'll take those 2 markets, man. I got probably 40 others to pick from. I'll bring them Wednesday. I talked to Ryland last week, and I'm trying to get that first mailer out, but I want to make sure I get the markets approved or start pulling data and pricing. So I appreciate that, man.
Yeah, of course, man. And just from the learnings that we went through here too, you can go back to that list of 40 or whatever it is. And I'm sure you'll go back with that with a new set of eyes, and there'll be some ones that are glaring that you could just remove. You're like, okay, there's a big city here, or there's too much supply or what have you. So usually what's going to happen is you're going to start with a list of what I would call it 50 markets. Your first 4 weeks, we're going to whittle that down to probably like 10 that are pretty good. And then we'll probably pick like 2 or 4 out of those to get started with it, like clearly the winners. And that remaining 10, we'll still monitor and track them. We'll probably market them at a later date. But a lot of the markets you pick in the beginning we'll probably never touch because we're just kind of looking for that needle in the haystack. But as you do it once, it becomes second nature. So yeah, man, bring those to the Wednesday call and we'll go through and give them kind of the final blessing, and then we can get data pulled.
All right, brother. Appreciate you, man.
Yeah, of course. All right, Prestone. I need another sanity check on this lead. Okay. I submitted this one last Monday, and you and I both agreed that it might be worth around 600 to 700K. I pitched her an offer of 320,000 cash. She then came back to me saying that a developer offered her 560. I offered to match up with a double close. On the Thursday sales call, we unleashed Dennis on her, and he wasn't able to make her budge from 560. Dennis is of the opinion that the acreage is worth maybe 500K on a good day due to the two comps listed below. He and I are also of the opinion that the other buyer isn't a developer at all, but a land investor who's offering to double close a property at $560,000. We believe that this is not a piece of land that a developer would want. I agree. I don't think this land is not developable. The seller and I have very good rapport, but she's anchored to the 560 price. I want to make something happen here, but I'm still not sure if my pricing is accurate. If this acreage is only worth 500K, should I not be offering 320K cash? Yeah. Okay, cool. What are your thoughts? I'll pull this up just so everyone can take a look at it. Yeah, good read on the bluff. There's no way that this is a developable property. And dude, honestly, again, like this just comes back to the kind of candor and raw honesty we bring to the calls to sellers. I would just tell her that point blank. I say maybe these guys, presented themselves as developers, but I don't mean to be wrong, Miss Seller. But this is not a development grade property. No one's ever going to develop this. I mean, maybe someone uses it for hunting. Like that's ultimately what this property probably ends up being used for. And just speaking some sanity into her. One thing too, I would be very, very, very careful to match so quickly. It's like poker, dude. You've got to be willing to trust your read on this property to know this. To know that if this is another land investor and they truly offer, because we know this is not a development property. So we know it's got to be another land investor. We know that they're probably going to double close it, but we also know that their math is super wrong. So why would we concede so much ground so quickly when our gut tells us if we can't do it, they can't do it? So let them go fall flat on their face, and then we come and kind of clean up shop. And so it's just this real kind of poker face that you've got to put on, and being able to give a little bit of breathing room when we're competing with other land investors for the seller to find out they're either full of shit or they don't call them back or they got their offer wrong, and we come in to save the day. Now we give a little FUD, a little fear, uncertainty, and doubt. We'll plant some seeds as to why this can't be developed, as to why they're probably not going to pull through on that offer, as to why you wouldn't want to take that offer. But I said, look at it, do this. Call them back today or call them back tomorrow. Let's circle back after you talk to them. My hunch is they're going to get with their team and they're going to renegotiate. And that's unfortunate. And I want to make an offer that you can take to the bank, but I also can't put myself in a bind where we're going to pay an amount that doesn't make sense for this property. So I don't even know what that number looks like yet, but go and talk to them, that we can circle back. Like you got to be willing to kind of give that breathing room for them to go and figure it out. I don't know what the stats are, but dude, it's like 9 times out of 10 that it blows up in their face. The other land investor doesn't call them back, or they're really rude or combative, or they don't like them, or they try to renegotiate. So that's my 2 cents. Don't give up so much ground so quickly on the renegotiation, especially because this isn't going to be developed. So for everyone here too, it's all these property. Which one is it? It's this one.
It's that and 2 ingress points. That's
okay.
it.
Okay, so it's
no
just
road
these.
frontage.
No road frontage. To access this property, you've got to cross a railroad track. It's got a ton of topography. It's super rural. No one's ever going to develop this. Like that's hilarious. This is like timberland or hunting land. That's it. And so I would just be super forthright with her on that.
Yeah.
And so I asked her, like, can I see the contract they sent? And I said, I look at whatever way you go in this deal. I just want to make sure that it works out for you.
They definitely didn't sign a contract. It's right now, and I encountered this on some other deals too, where so I watched this airplane movie a while ago. It's called Nebraska. It's a story about this old guy who thought he won $1 million through like a sweepstakes mailer, and he traveled 1,000 miles via truck to like claim his prize. Some of these older sellers, I find that they're very much in the same position. And like Dennis was really trying to tear the other buyer down, and they just won't budge because they just had the idea that, oh, well, can get another 200K out of this.
Yes. Yeah. So what I've learned is, you got to be careful with the tear down. I just plant the seeds. I don't try to go too hard on the tear down. But what I found is you've got to let them find out the hard way. And that's where that breathing room comes into play. But I'm also going to prompt them to take action quickly. Like, and it also creates this dynamic where it's like, I don't need you. I don't need this deal. I want you to figure it out. I want you to be safe. I want this deal to work out for you. And whatever that looks like, great. If it means working with them, amazing. If I were you, I would take the 560. But what I will tell you is this property's not worth 560, and I know they're going to renegotiate. And if that happens, I want you to call me back and we'll go through some solutions that might make sense for you.
Yeah.
Something like that. And the good news is if they renegotiate her and you haven't had to go through that renegotiation process, she's instantly going to be jaded with them. And you're going to look like the savior and the hero, the guy that was stuck to his word and was conservative and all that
Yeah.
jazz. So it also pays to not jump on an offer so quickly where we know we're going to have to double back. It's not that that person can't rectify and make the deal work, but it definitely docks them down points with the seller. They don't like it and renegotiate. It feels like the rug's getting pulled from them. And this is a line I always use. I always say, dude, if I were you and someone offered me 200K over, I would do it. I mean, that sounds like the lottery, but the lottery's thin odds. It doesn't always work. So go find out.
Yeah.
So anyways, the 500K, we can take a look at that. I don't know. That seems, I don't know what
The
this
comp that kind of encouraged us was that adjacent lot was sold for 350K recently. And it's a much smaller lot.
Yep. So this one's 144. What was the size of that one that sold at 350?
Oh, that was maybe 70.
Okay.
But these are similar in that they have smaller access, smaller road frontage. And to get to the property, you have to, there's not any large road frontage on any of these properties.
Yeah.
Whereas the more premium properties in this county, in this acreage range, they have quite a bit of road frontage.
Yeah, gotcha. The other one, it had better road frontage, that adjacent comp, right?
Yes. Yeah.
Gotcha. Okay.
So it probably had some subdivide potential even.
Yeah. Okay, so this one does have development potential. Oddly, it sold for not as much as I would expect it to with development potential. Again, this is such a rural county, though. Even if it was like perfect development grade, I don't know who's going to develop it. It's just so rural out here. So this one's got
It's not so bad. It's right above Richmond. Like to get to Richmond, it's maybe,
let's see,
looks like maybe 30 minutes.
Let's zoom out. Yeah, I don't know, man. I mean, for like a real like entitlement play, maybe someone would do like a rural subdivide, sell off 5-acre home site, something like that. I just couldn't see. So it's too rural. And this, I mean, and your property in particular has got no development potential, in my opinion, just in general. But even just out here, I don't know. I mean, yeah, someone might do like a ranchette type play, but what was I going to say? I forget what I was going to say. It was something I was going to add on. Anyways, this one is surprisingly low. 491 sold in 2 months. They got what they were asking. This person started at 750, adjusted in August, went under contract in September, and they got 580 for it. This is a pretty similar comp in a lot of ways. This one does have a pond, does have an old building on it. This guy's got some stuff. Also has transmission lines running through it, though. This one does butt up to a subdivision. This one, I don't know who would develop it, but this one might have a little more development potential. Okay, so let's go look at years. Yeah, God, our math might have been slightly off. It was this Longview land that sold, right? Dude, what I would do, I mean, honestly, this guy might be your buyer right here, Longview land. And this guy might be willing to pay a real premium. He might be willing to pay close to the price breaker of what he's paying on his, or not so far off. Yeah, I mean, I think that the 320 is probably maybe a little too optimistic as a cash close. You'd still need like we do need an expert's opinion on this, because we've got essentially 2 on market, 1 off market comp.
Yeah,
someone needs to get to the interior of this property. That's going to be the real needle mover here. Like, what is the access like crossing this railroad and getting to the interior of the property? Looks like you do have a little pond on it as well.
Yeah.
If that's not feasible, that's going to be a huge knock on value as well. So there's definitely boots on the ground would be needed, and someone that really knows this market pretty well. I could see this. I could see this thing still trading close to a double your money situation at 320. 500 seems possible as well. I mean, it's just too hard to say from 3 comps. Yeah, man. I think no matter what, though, this probably, being that you're going to be in a bit of a bidding war, this probably doesn't end up as a cash close more than likely.
That's what I'm thinking.
Yeah, this is probably going to be a rapport play more than anything, where you're going to have to beat them out with integrity, great communication, kind of holding her hand, guiding her through that process, not feeling like you need the deal, letting her know she's got options, whatever option works best for her, she should take. And then giving her a double close offer that's probably in the low 400s, high 300s is probably how this is going to pan out. Yeah, I don't know. I'm curious where the other people got their underwriting from. Maybe they really do have a way to make 560 work. I kind of doubt it though. Seems unlikely.
I doubt it.
Yeah.
Or she's just making it up. Hopefully that's not the case.
Well, I mean, usually there's a kernel of truth to it, but usually it can be a sliver of truth, as in she might have gotten a text with a range offer, or sometimes it's like a broker gives them an opinion and they think that's a real offer. Like, yeah, sometimes it's a lot less real than we might imagine it to be. Have you prompted her to kind of take next steps with them to feel them out?
Yeah, that's I've been doing that for last week, and she won't, like, when we pressed on it, when I pressed on it, when Dennis pressed on it, oh, is there a signed contract or anything? She wouldn't really reveal her cards in that sense, which makes me think that there's no signed contract.
Oh, there's definitely a signed contract. No way.
Yeah, and she likes me. That's good.
Yeah.
I did the thing where I sent a gift. Like, I didn't think that would work, but she got the gift and she really enjoyed it. So
what'd you send her?
Oh, well, Dennis found out on the call that she hurt her arm, so I sent her some CBD cream.
Ooh, great gift, man. Nice.
You can gift wrap it for like $3, and then you can put a little note in there. It's pretty cool.
Dude, that's dope, man. Yeah, for everyone here, the gift giving is just superior. It's such an easy game. How much did that cost you? Like $30?
No, it was like $12.
Okay, and it's just the amount of credibility that wins you over is insane. So in situations like this too, I like to use the negative. So I never like to ask, do you have a contract? Because they're always going to bluff or not want to tell you. And of course, they're negotiating, they want to keep their cards close. So I always like to use a negative. I say, hey, look, I want to be respectful of your time. I want to be respectful for the other party that you're working with. Should I even submit an offer, or is this already under contract? Because if it is, I don't want to step on anyone's toes. And they're like, no, you should still submit. Okay, cool. All right, now you know. So I like to kind of use the inverse, and they usually show their cards a bit more. Dude, honestly, this is like a very typical deal of what a lot of bigger deals look like, as in this is going to be a tug of war game, not even just with the other party, but with the seller. It's going to be pulling her back down to reality after she gets renegotiated. She has to swallow that pill. That'll take a couple of weeks. She's probably going to get counsel from family members or a friend. She'll finally come to terms with it. And if you stay in the game and we keep on showing up, it's not a guarantee, but you've got a pretty good shot to be the one that she chooses. But these are not, I don't think there's anything that we can do to fast track her decision making other than continuing to show up. And I would use that negative. I would go back to her and just ask her, like, should I even submit an offer, or do you already have this under contract? Which we were pretty certain the answer is no, but just to feel it out.
Yeah, definitely.
And in the interim, I would try to get a broker's opinion. I mean, you could even take the ones that sold these two listings. In a perfect world, they drive up to the property and see it. And maybe you want to ask for approval. Just say, hey, I'm trying to spot check the access. Is it okay if I send someone out there to go look at it?
Definitely.
Yeah. Just out of curiosity, Preston, why is she not listing this if she wants to get top dollar?
I already know why. It's because she's 80 years old and she's very difficult to deal with. And that's where people like us come in, because she's not gonna, she's tired of this. This belongs to her ex-husband and they've done nothing with it and it's hers now. And she's tired of talking to these quote unquote developers and investors and stuff like that and getting 20 phone calls a week. She just wants to be done with it, but she wants a price that doesn't make her feel like she's being cheated either.
For sure. Does she have a number in mind before she got that 560 offer?
No. She told me to shoot my shot. She's keeping her cards real close. She's a tough cookie.
Yeah. Have you really doubled down on the kind of the value proposition beyond just the offer and kind of relating that back to what stuff that you just relayed to me?
Yeah. I mean, I sent her a contract and she read the contract and they have the price and everything. So there's a contract in her email right now, but she's 80. So 80-year-old, when you're that old, you can only do one thing. You can only make one decision per day.
Yeah.
So it's gonna be a tug of war, like you said.
Yeah. And in that tug of war, though, beyond sending a contract, once you know that little kernel of truth for them, I beat that horse until it's dead and I keep on beating it. Like, I'm going to keep on reiterating, I want to make this easy for you. I understand you've been through the ringer with developers. Like the offer that I make, that's an offer you can take to the bank. I'm not saying you have to take it, but I just want to know I just want you to know that you've got options. And I might not be a developer. I might not be the guy that can go and turn this into a magical subdivision and pay as much as humanly as possible. But I am the guy that's going to make this a century, and I'm guaranteed it's a fair price. And it's not I don't bring that up in one conversation. That's in all my communication.
Yeah.
Really hammering that home. Ultimately, if she has been getting blown up by developers, I'm sure she's gotten high offers before, but there's a reason that she hasn't taken it, because I'm sure they probably dicked her around and dragged her through the mud and renegotiated her, asked for 12 months in terms. Like,
Yeah.
I think that might be more of a needle mover than just price in the situation.
Yeah. Now that I think that I need to price this more about maybe in the high 300s as far as an offer price goes for a double close. I mean, I think it'll be tough to talk her out of that 560 until it blows up. So I just have to keep following up once a week or once a week and a half and wait till it blows up. And then I swoop in with something that sounds reasonable.
Spot on. And while you're looping in and touching base, again, you're just making that case beyond price, and you're just planting those seeds. And ultimately, this deal might not pan out, but this is the exercise that we go through on every deal, and we pretend like it is going to pan out, and we just keep on showing up. We buy the gifts, we send the drift videos, we send the voice memo, we do it all. And when it works out in a big way. The good news is I think your competition is pretty feeble here, so I think you've got a pretty good shot. But what you need, without a shadow of a doubt, what you need is some confidence in what the hell this thing is worth. So that's going to involve probably a broker for a deal of this size where there's so few comps. You're going to need someone that has a real opinion on it, or knows the market, or knows the property even.
Yeah, I'm reaching out to some, but they are slow, so I'll have to reach out to them again.
Yep, yeah, I can imagine in a market like this. But any more questions on this one?
No, that's pretty much it. I think I have a good game plan for this. Thanks.
Kind of a bummer that there's not more exit strategies. I mean, like double closing a giant deal is not my favorite play. But given, and look at the cash close could still certainly be on the table depending on what we hear back from the realtors. I could see how this could be a $600,000 property. Again, I could also see how it's worth $500,000. I think it's somewhere in that ballpark. But it's tough. There's no subdivided potential here. Cash close is probably pretty weak. So really double closes are only route, which I don't love, because for a lady like this, what she needs is a cash close. Like that's what's going to serve her at the highest level. Right. So if you do get in bed and you guys do a deal together, really make the case that she's got options and really explain thoroughly the difference between the two. Because honestly, if just getting this thing done and she's got limited time, like there's an opportunity cost for her to wait 6 months to not get the money, man.
That's what I'm thinking.
But she's 80 years old, you know. Yeah, the money's better in your bank account today. So make sure that she knows her options.
She owns hundreds of acres there. Yeah. So I don't think price is the big thing. It's just has to be fair. Yeah. People feel like they want to get it. They're winning you over, and that's part of the negotiation game. It's like it's not always just about them getting the highest price. They want to feel like they beat you. It's like the human instinct, you know. They want to feel like Preston got the short end of that stick, and so you also kind of want to create the situation where she can feel like she really won you over, and so give her a good squabble in the negotiation. That's why going up to 560 so quick, pretty much in any situation, is not a good idea, especially if there's competition involved. But give her that tug of war so she feels like she wins you over. I think that's going to be a big part of it, and then just an easy transaction. Yeah, I don't even think this lady's 80 years old, owns hundreds of acres. I'm sure she's got money. I don't think that she's like living hand to mouth. She has a lot, for sure. Yeah, it's so silly, man. Human psychology is so fascinating. I mean, you learn so much in this business about how humans operate, and like just the subtle psychology of negotiations and people parting way with assets is such a funny game, because as the buyers, we always think it's this highly rational game of just price. They just want the highest price. There's all these subtleties behind the scenes that are dictating their decision making that have something to do with price, but not everything to do with price. And I think that's a grave mistake that we can make, is only using prices or only lever to get a deal done. There's a lot more to it. So this is a good exercise in negotiation, man. This will teach you a lot. Sound good, Preston? 2 thumbs up. Thank you. Yeah,
of course. Mr. McCormick, you on the call? Kevin? I don't know if Kevin is on the call. I don't think he is. All right, we'll go through this deal for Kevin. Oh, he said he'll be at a doctor's appointment, so that was my bad. Okay, 3.76 wooded acres, split in 3 lots due to 2 roads cutting through. Middle lot has power line easement. Lower slope lot has Bear Creek and floodplain off Harmonia Road. Final right lot has good flat topography for a home site of about 1.5 acres. Bought in 1980, inherited from husband who passed. Assessed at 6,000, asking price 30, mailed offer 10. Anticipated sale price about 15. So, general questions. Is this property even worth going after given the small size and low acreage value? To me, it seems my buy price must be very low, 4.5K at best, with long closing period for double close. Factor in closing costs, realtor commissions, etc. This is obviously hardly a base hit, but if there's money to be made, I try to pursue as often as possible. Kevin, that's probably why you're successful in a relatively short time in this business, because you definitely pursue things to their furthest conclusion. Seller said she got an offer for $90,000 2 years ago. That's bullshit. From a home developer. Developer told the seller that they would plan to clear the non-flood zone portion to build a home for future sale. Who knows though? Seller could have made that up, since to me that's far above market value. Yada yada. Okay, cool. Yeah, so that's a joke. She would have taken that $90,000 offer in a heartbeat. That's fake news. And she's got the taxes hanging over her head, so she's obviously pretty darn motivated. One thing that I will say, and I've said this before, but it bears repeating, because we don't really do a lot of small deals inside of Leah. Like most deals that people will do are, I'd say, north of 25K on average. The offer math as a percentage looks a lot different on these smaller deals. So I'm never going to offer 50% of what a deal is worth. I'm offering 5%, 10%, maybe as high as 30%. Because a lot of our costs don't change, like the title costs and photos, like that stays pretty constant for us, no matter how small or big the deal is. It shifts a little bit, but it's still going to be relatively in the same ballpark. Also, the demographic that you deal with, like this lady who can't handle paying the taxes, you're dealing with a demographic that on the socioeconomic totem pole's a lot lower. And so they're a lot more negotiable. You're also dealing with a property where there's just less value. And so taking a 20% hit on a $15,000 property is $3,000. That doesn't feel the same as a $150,000 property, even though it's the same percentage. So I see folks that go after these small deals that are offering on them as if they were a regular deal. I mean, these are the kinds of properties that we'd buy at $2,500, $3,500, $4,000. We actually just did one of these deals last week that we sold. That's just like a classic. It's buy for 5,000, sell for 25,000. 25,000 maybe a little higher than what they normally sell at, but I find that $5,000 bracket, we're almost always tripling our money at the very least. That's like a bare minimum for us. It's just not worth anyone's time if you go any lower. And Kevin, I don't know if this is a double close candidate. Part of the thing too is that, like, because we're dealing with people that are on that lower end of the totem pole, they need money quick. So the pitch of closing quick becomes a lot more relevant on small deals. The guy that's got buku bucks doesn't really care if it's a 1 month or 2 month closing. Someone like this, it really does matter to them. So I don't even know if this would be a double close candidate, to be honest. Also, the likelihood of finding a double close realtor that also wants to take on a tiny property is very unlikely as well. So that means now you're going into more than likely the flat fee on MLS territory, which I try to avoid at pretty much any cost. So yeah, it's just my 2 cents. This is probably going to be more of a cash close than anything else, but we can go take a look at the comps here. Comp 1. $120,000 total sales. What is this? This is 28 acres. I don't think that's a fair comp. And then 56,000 for a 4 acre. Okay, this is an off-market comp. Okay, so that's not very helpful. Okay, I'm gonna do something behind the scenes real quick. I'm gonna stop sharing my screen for 1 second and I'm gonna pull it up again. Just give me 1 second, guys. Using a little secret piece of software. Okay, I really don't love this property. I don't like the way this property sits. I don't like the 2 roads going through it. You've got very little usable area. My hunch here is the math that I gave in the beginning is probably what this pans out to. This is probably a deal that we end up buying for $2,500 to maybe $4,000. Where are the coordinates? Here we go. Okay. Just give me 1 sec, guys. I'm just gonna get something queued up in the background. Okay. Here in Las Vegas, October 11th, 12th, and 13th, we are hosting the biggest land investing mastermind of all of 2024. Hundreds of land investors, a star-studded lineup of land investing speakers, coaches, and even folks that aren't even in the land space that are going to come and shift your perspective on what's possible in 2024 and beyond. We've got a few more tickets left for general admission. We're 100% sold out for VIP. Go to landinvestor.co/mastermind and grab your seat. Hey guys, I want to let you know that inside of Leah, that is our 12-month group coaching program, we have added a 6-figure guarantee. That's 6 figures in gross pipeline profit in 12 months, or we will work with you until you get there. Now, that is not a guarantee that you will hit 6 figures in pipeline profit in 12 months. No, that is a guarantee that we will get you there no matter what the timeline is. Might happen in 3 months, might happen in 6 months, might happen in 24 months. The guarantee is you get a plug into our system, which is essentially a business in a box for land flipping, and we will scale you to 6 figures together. And if we don't do it in 12 months, we will work with you for free until you get there. There is no offer out there that provides a guarantee like this. Will it be challenging? Absolutely. Will you be tested? Absolutely. But if you think you've got what it takes and you're ready to build a business that changes your life in 2024 and beyond, I want you to go to landinvestor.co/apply. Hey guys, I want to let you know that I've released a free Chrome plugin for land investors. It's a comping tool. It's going to save you 30 minutes to maybe even an hour a day with your comping on sites like Redfin, like Zillow, like land.com. It's amazing. Our team and I have been using it for over a year, and we've got over 600 folks that are using it every single day within their land business, and it's 100% free. Go over to landinsights.co/Chrome. What's up, guys? I want to let you know that my team's put together a ridiculously amazing webinar, and we are releasing it for free. If you want to get access to it, it's over at landinsights.co/unfair. It's all about creating your unfair land investing advantage, how we're using data and AI to build an unfair advantage where no one can compete with us, how we are getting deals in the best markets, how we're getting deals that no one else is getting access to, how we're creating super accurate offers for our marketing, and how we are removing 50% plus of all of the waste within our marketing to 2x our ROAS. If that sounds interesting, go to landinsights.co/unfair. Hey, I want to let you know that Land Insights is opening up seats. If you don't know what Land Insights is, it is our AI platform that allows you to go and aggregate all of the counties, all of the zip codes all across the US to find the hottest land investing markets. It'll also allow you to see all of the pricing insights, all the prices that have sold within the last 3 months, 6 months, 12 months, and then give you interpretations based off how you should be pricing your offers, show you if pricing a blind offer in a given market is even a possibility. We have a Genie scoring system which shows you how homogenous the pricing is within a market. Essentially, it's the greatest thing that's ever been invented since sliced bread for land investors. It even has a feature that'll scrub all of your data, remove landlocked, flood zone, all the junk properties you wouldn't want to market to. It does it all. It skip traces your properties. It'll find you realtors. It'll edit your drone photos. It's bananas. And frankly, if you don't have access to this in 2024 and beyond, I think you're getting left in the dust. Go to landinsights.co/apply. Come hop on a call. We will show you exactly how this tool works A to Z. See you inside. And this is 3.76 acres. All right. So, our closest comp, so we've got a comp that's 5 miles away. It's our closest comp, 2.6 acres, that sold at $35,000. I'm going to pull up the link and I'll share my screen here in a second. We've got the second closest comp is 6 miles for a 2 acre that sold at 20,000, and then it just falls off. Now we're at 17 miles away. It gets really far really quick. And then I'm going to share my screen here and we'll take a look. Preston, you're riding it out, man. I haven't seen Preston Drake. I haven't seen you on a call this long in eons, man. You're really hanging out, hanging tough.
I got to show my face sometime.
Man. How's everything going in your biz?
Things are good. Got this, just trying to sell some property on these subdivides. We got a good note sale generated yesterday.
Nice.
Like 1,300 a month.
Nice.
For 15 years.
Oh my God. That's crazy, man. Are you going to keep it or are you going to sell it?
Dude, it's I'll probably sell it. And it's at 12% interest, but dude, you're surprised by, I think as more note buyers entering the space, like
I think so too.
You can get some pretty good returns even on 15-year notes.
Yeah. Yeah, it's gotten a lot better. I remember when I was trying to sell notes like 2 years ago, they were not the best notes ever, but I was getting like 65% of what the note was worth. And now we're getting like consistently 80%. And there's
Yeah.
like, when we put things up, we get way more offers. I think people are wising up. And that's why everyone on this call, please put owner financing on every deal you're cash closing. It gives you so many more options. Preston, you have any cool deals that you're working on the acquisition side?
No, man, just really revving up on the disposition side for this 172 acre one. It's
Okay.
going on market next month. So
And
that's
that's the
taking-
one in Oklahoma,
That's in Texas.
Texas. Okay.
Yeah.
Are you doing any marketing, or is it still you're playing the on market game?
No, I'm going for off market again.
Okay.
I mean, why not? You know,
Yeah.
and I'll say I know y'all were talking about keeping the wheels turning. I mean, I'm definitely getting the flipping back up.
Yeah.
Just why not? It's good to have that going in the background.
Yeah. Yeah. I think it's you got to have the scales balance. You got to have both. And ultimately, when we have that flipping engine running, we're just getting in front of more sellers and we just get more subdivided opportunity that way. So
Definitely.
I think it's the move, man. Well, it's good to see you on here. I'm gonna go through these comps here. So this one's not even remotely similar. It's just 17 miles away with a shed on it, sold at 34 grand. Similar size, but I wouldn't say it's a fair comparison. This one's also 17 miles away. It sold at 32 for a 2 acre. So far, man, so far. This listing doesn't tell us anything, but it's got perk approved and a septic design. So this has probably got a 5,000 premium on it. I'd say somewhere in that territory. 2 acre at 26. This one's like 6 miles away, I think. This is a lot nicer. It's got a little cabin on it as well with electric garage, and it's got a camper. So that one's a bit nicer. And then this is our closest comp. This is in a subdivision at 35 grand. And this one's, I think, 5 acres away. Again, this is a nicer property. Let's go back and look at this here. Kevin, I think your underwriting is pretty accurate. I think there's a world where this fetches 20K, kind of in the best case scenario. I don't know anything about this market. If it's in demand, yeah, I could see this going for 20K. I think 15K is kind of a worst case. I'd still go same process for making our offer though. I'd probably give them a range of 2,500 to maybe like you said, maybe 4,500 max. More than likely, it's going to need to be a cash close though. And if they want anything over that, all right, double close it, take a swing at it, put $1 down for earnest money, see what happens. But I don't really like this as a double close. Just the amount of effort it's going to take to find a realtor, in my humble opinion, for this small of a property with a double close, it's hours. And at that point, I just don't even know if it's worth your time. Just my 2 cents though. But a cash close would be pretty easy breezy on this. All right, last but not least, Mike V. Mike, you on the call?
Yo, what's up, buddy?
Yo, what do you got for me?
How are you?
I'm good, man. I'm good. You on vacation or something?
I'm getting prepared Wednesday.
Where are you going?
Going down to Seaside Park, Jersey.
Okay.
It's gonna be first vacation in 8 years.
8 years?
Yeah, my son was hospitalized 4 years of his life. I think I told you that briefly.
Yeah.
My son was on a ventilator up until last year.
Yeah.
So he just came off the ventilator last year, just got decannulated, it's called. Trachea came out.
Yeah.
And got surgery 2 weeks ago. He just had his trachea closed.
Okay.
So we just took him to the doctor today. So for the first time in his life, he can actually go to the beach.
Wow.
And we don't have to worry about crap going down into his lungs. And yeah, first vacation for my wife and I in 8 freaking years. It's a vacation, and it's also a little bit of an investor play. I have a very close friend who's got extremely deep pockets, who owns a house down in Ortley. And he's interested in funding some of my deals going forward.
Dude, that's a 3-piece win right there. 8 years is a big deal, but dude, for your son to go to the beach for the first time, that's pretty surreal.
Yeah, it's gonna be. He requires nursing, 24/7 nursing. So our nurse is nice enough; she's coming with us.
Okay.
So what'll be nice is when he goes to bed, and I rented an Airbnb, so when he goes to bed, my wife and I can actually go out to dinner like at 5, 6 o'clock, just the two of us, and we haven't done that in freaking 8 years, pretty much.
Oh man, dude,
Yeah, dude.
that's amazing. Well deserved, man. I'm happy for
Thank you.
That's awesome.
Yeah. On a side note, real quick, to switch subjects before we jump into this, I know you got a hard stop in about 10 minutes. I got 4 deals. Well, I got 1 deal that I closed, as you know of. I got 3 deals in contract. This one that you helped me out with last week, the buy for 25. It's a value add basically that the owner is going to give me legal deeded access to her property. Surveys costing me 2,700. Perk test is costing me 1,100.
Yep.
And closing costs roughly 12. So basically, I'm all in for 30K on this. And my realtor went up there today to walk it and take drone footage. It's a signed contract, obviously. I have them coming to perk it next week. Survey's being done in 2 weeks, and I hired Seb to handle the the paperwork for all that stuff, the legal jargon, right? So here's my question: when my realtor went up there today, he said that the easement's probably only going to be about 60 feet. It's not much, but it needs to be brush hogged a little bit. And like, I don't want to put any more money into this, and I'm not being cheap, but I'm like, should I just leave that on the buyer's end at this point, because they're getting a brand new survey, 2024, right? Brand new easement 2024, brand new perk test, right? So everything's going to be updated. Is it worth it to spend another, I don't know what it's going to cost, maybe 2K, 3K to brush hog all that crap out of there?
Yeah, it's a good question. Do you know, he said 600 feet would need to be cleared?
No. He said he thinks there's only 60 feet of easement, but this is just coming from my realtor. We won't know until the surveyor initially, puts the stamp of approval on what's going to be needed, right? But there's like trees overhanging. There's a bunch of stuff. It's like, do I really spend? By the way, it's going to be listed for 69. So my underwriting was pretty spot on. I had it anywhere between like 60 to 75 on the high end, and he feels 69 is where we can list it. And I'm guessing, and again, we don't have a crystal ball.
Yep.
Worst case exit scenario, maybe 60, maybe 58. Yep. So I'd be looking at about a 20. I'm funding this one myself. So probably looking at like a 20, 25K profit on it.
Okay, cool. Here's my 2 cents. I mean, brush hogging, it can be surprisingly cheap, and it definitely can be a wise value add. But in this case, I would bring it to market without doing that. And if you get a lot of pushback or you're not getting the leads that you want, then I would go and clear it.
Okay.
Honestly, I think this thing is going to sell just fine without it. But if you do run into it, you'll get that money back in the sale. It's not like it's going to be a loss, but it just might not be needed at the same time.
Okay.
Honestly, it's properties like this that I feel like clearing goes a long way, where your whole access point is just choked out with shrubs and trees. This is where I wouldn't clear this whole thing, obviously, but
no, I'm sorry. No, this isn't the property we're talking about.
No, I know. No, I was using it as an example. I was using an example.
Gotcha.
But that property, what I was saying is that property is clear enough to where they can drive up and see the vision. It's just the only issue is when a buyer pulls up and they're just looking at woods and nothing else. That's where clearing become a real value add.
They basically have to walk 60 feet in, and then it opens up to a wide open 6 acres.
I think it's fine. Now, worst case, if you do have to do it, it's probably going to be $800 to $1,500. And some realtors out there, it's insane, but I've seen realtors even cover that cost, which is very rare, but it's happened.
Right. Okay.
So yeah, I wouldn't worry about it until you bring it to market and we can get feedback.
Cool. So this deal here, Sumner, is first of all, it's interesting because the guy who called me is a professional speaker, and his aunt called him and was like, I got this letter in the mail. I don't know if it's a scam. He did real estate he's 56 years old. He did real estate for like 30 years. He knows all the lingo. He knows everything about double closing. We talked about that whole thing, which is pretty dope, dude, because honestly, he knows where I'm at. Yeah. So I presented an offer today of $110,650 something dollars. It's right there on there. I mailed her at 140. Yeah. I think the exit on this, and you'll look at these comps. If you look at that last comp, it's very interesting. The last one, if you want, however you want to do it, it's fine. Then we'll go into them.
I'll pull all of them up.
Yeah. So basically, this gentleman is a professional speaker and he coaches people. So you have Leah. He has his own version, and he's done he's worked with like Patrick Ewing and all these crazy different celebrities. Yeah, check them out, man. He's totally legit. And basically, I put the offer in tonight. I could not wait for a realtor. I was looking for a realtor. She was going to hook me up and check it out, but she's driving to Ohio or some crap. So I was like, you know what? I need to get this. I need to get an offer presented, right? Because this is another pretty hot deal, I think. Yep. So basically, I think my underwriting was kind of on, and that's why I reached out to this local realtor. My other reasoning, more so than the comping, is just to see what demand there was in the area. So this one's interesting because this sold for, what did I get there? What did I write down there? About 14K an acre. It ended up coming out to something like that.
Let's see. Yeah, 12.1.
There you go.
I'll get that pulled up for you guys. So 12.1 on a 16.5 acre. Contact sense now. It's funny, they're advertising this as a subdivide potential, but this has got no subdivide potential, in my opinion. This one is, again, partially cleared, and it looks like they're harvesting something on it, which is a bit of a benefit for this partial clearing, but I think you're still probably within this territory, plus or minus. Actually, wait, hold on. Is that math? Yeah, that math is right.
Well, check out another deal I put there. It's in a flood zone. It's in a flood zone. I was wondering why it's so cheap, but 80% of it is in a flood zone and it's still sold for really good money. When you back out, I'll show you which one it is.
Okay.
I think I wrote a description on it.
This
as well.
one, number 2.
So the one that I wrote, whatever I wrote there, this is an 80% flood zone.
Yep. So 17 acres, 17.
So for 146.5, right?
Yep. Yeah,
Yeah.
146.5. Cool. Let's go look at the days on market. 157 in March, under contract. Well, I went under contract quick. Then I fell out and then relisted and sold quick. Okay, cool. So that's at 146. Redfin's even saying this is worth 173 now, which is interesting. Now this one sold at 200. Sorry, I was looking at this 223, which is the Redfin estimate. I want to go.
I'll scroll down real quick. I'm sorry to interrupt you. Look at this one. They got over asking.
Yep. Got bid up by 5K. Sold in 6 days. This is a hot market. Let me go look through these other ones here. So this is a weird kind of ag comp. They're retaining a pie-shaped piece of the land. Okay, so this is kind of a weird comp. That one, we looked at that one. We looked at that one. Okay, so 12.5, 187. This is interesting. This has got similar kind of foliage going on as yours. 12 acres sold at 190. And this sold June 23rd, July 7th. Cool. Okay. So let's do the math on that. 190. So sold at exactly 10K an acre. No, 190.
No, more than that.
Yeah, 190.
I got it right here. 14.7 an acre.
Okay. 14.7 an acre. Let's go back and look at years. Sorry, it's taking a minute to load.
So there's a stream that creek that runs through this Sumner. Now,
Yeah.
Because of all that roadside frontage, do we not see a subdivide play here or no?
You could. You definitely could subdivide. This wouldn't be like the dream situation. You could do it pretty easily a lot split here and just kind of carve this out like this. You could even do flagpole lots, which I wouldn't recommend. But yeah, you could certainly do a lot split on this. I don't know enough about this market on how much that value that would add. You probably get a 10 to 15% kicker on the list price by doing that.
Right. What's interesting about this one is when I called the realtor, she did know. I learned something new every day. She said, find out if it's a jurisdictional creek. If it's a jurisdictional creek, then you're going to have an issue, she said, with the subdivide.
Interesting. Do you know if it is?
I tried to find out. They told me to look at the deed. I pulled the deed up and I don't see anything on the deed specifying a creek. Here's the deal. I think I underwrote it pretty well. I think we can exit with this at worst case 200K.
Yep.
And I think we can exit at 220. So that's why I came in at 110 on the offer.
Yep. Yeah, I think your underwriting is pretty spot on. The one thing I am concerned about is it's so choked out. And is there any access point to the interior? Do you know?
No, I don't think so.
Okay. That's a good negotiation chip that we can use with the seller if they fight you on the 110. Look at it. I would bring it to market and see what happens, but this very well might need some clearing. And usually I would just clear like a bit of a footpath into it. It doesn't have to, I wouldn't clear the whole length of the road frontage here. Just some way for buyers to get to partially the part of the interior. That's going to be a real expense for someone that has to come in and do it. But it also just makes it harder to sell the deal. Like we definitely, the days on market creep up. This is a pretty hot market, so it might not be a deal killer. So I wouldn't do it right out of the gate, but something I would consider. Looking at this comp, pretty much got the same thing going on, and this did sell. Let's see, this sold in less than a month, so it really might not be needed. I think your underwriting is pretty airtight on this. Were you looking to double close or cash close?
Cash close it.
Okay.
Unless he understands. I explained to him, got into the whole double close talk, and I told him, I said, listen, I really don't like doing. He understood the terminology because he said simultaneous. He kept calling it simultaneous closing. So obviously he knows exactly what it is.
Yeah.
And I told him, I said, at the 140, bottom line is like, I'll present my aunt with the offer. He goes, worst case, she says no. So if she does say no and come back, the only counter I was thinking about coming up to is maybe 116.
Yeah, I think you could afford that. I think this is like best case is probably 235, maybe 230 for this. If I
Correct. And I'm thinking worst exit on this property, and you correct me if you may think I'm off. I'm thinking worst exit would be 200 on this
Oh
property.
yeah, on a real bad day, unless there's some skeletons in the closet we don't know about. I'd be shocked. I'd be shocked. I mean,
Topography is great. It does
Yeah.
not have wetlands besides the creek that runs through just in the very beginning of the property, runs across. Other than that, man, it's like, I know it was inherited because I checked the deed obviously today. So she inherited it, but there were like, I don't know, like 8 people on the deed that granted it to her, this young lady who owns it and her husband. And like I said, this gentleman called me up. He said his aunt called. She just wanted to make sure it wasn't a scam. He did real estate for like 30 years.
Yeah.
And that's it. That's kind of where we are. I just want to see, and I'm glad I sent the offer out today. I'm waiting to hear back from him, and I'll be on him tomorrow, and hopefully, get a contract in. I got a,
sorry.
sorry to interrupt you. What'd you say?
Oh no, you're good. You're good. You go.
No, I was going to say between these 4 deals I have a pipeline profit right now of 145K. So, which is pretty good. I mean, that one first deal kind of, bumped that up, obviously. But I wanted to ask, and geez, did I write it down here? There was something else I had to ask. Shit. I asked you about the brush hog. I asked you about the subdivide play. Oh, the perk. So I've been perking a lot of properties that obviously are 6 acres or below, but North Carolina, this realtor said she has somebody who's like a soil scientist that can just come check the soil as opposed to a perk. Do you think it is beneficial on a 19.8 acre to, perk this thing?
Yeah. Did she give you a quote on it?
No. I mean, listen, the perks have been pretty. I mean, I think they've been pretty fair in South Carolina. I don't know what North Carolina charges, but like the next one I'm doing this week is $1,100, so it's not terrible.
Yeah, I mean, in North Carolina and the Southeast, it definitely becomes super relevant. 19 acres, I would imagine this has to perk somewhere on it. I don't know if I would get a perk test, but if the soil scientist is reasonable or wants to do it pro bono through the realtor, I would definitely do it. I would be shocked if this didn't perk somewhere though. But it will, depending on where it does perk, it will influence the cost for someone to develop. Like imagine if it doesn't perk up here, they're gonna have to build essentially a bridge. Or is this the creek right here? Yeah.
No, it actually runs. I don't know if you have time to open up Land ID. You can see it better in Land ID. So here's my question too. If they come back and she's dead set on 140, right? As much as I really don't want to double close, not that I don't want to, I just, I don't want to make that my business model. I just don't.
Yep.
But since the gentleman, her nephew or grandson, whoever he is, again, I think this is his aunt. I mean, it doesn't hurt to throw it at them if he's like, you know what, she won't take any less than 140.
Yeah, dude, 100%. I mean, look, at a double closing can get sticky, but when it gets sticky is when you've got the wrong seller for it. If he's in the know and he's going to be your champion and kind of root for you, this would be a smooth.
It's interesting you mentioned that because that's exactly what he said. He actually liked my energy. He's like, dude, check me out. He goes, I like your energy. He goes, I like your style. He goes, even if my aunt doesn't take this, keep in touch with me. I mean, he gave me all his coaching stuff. I mean, he's a professional coach for speakers.
Wow.
Which is pretty wild.
Dude, that's awesome, man. Yeah, having someone like that on your side, I think this deal goes through, whether it's cash or double close. But I would certainly make the double close offer if it comes down to it. Dude, to be honest, though, I think they're going to take your offer. I
hope so.
I feel pretty confident. Let's go look at where the creek is. I thought it was in that kind of the dip on the property, because that would be the one thing that I would consider if there were concerns the soil scientists going out there. I would get a perk test. It's $1,100. It's ultimately small beans in the grand scheme of things. Okay, it'll take a second to load. It's being slow.
Sure.
Okay, so runs like that. Oh, interesting.
Correct.
No, that's not what I expected at all. Okay.
So the reason why I mentioned the subdivide play is I don't know how many acres that is on the right there. I'd say maybe that's maybe like 2 acres, if max, right?
Yeah.
Couldn't like something be put there and then a road be brought up and then zoom out, please. That's what I wanted to show you. If you zoom out, it looks like they were starting to do a subdivide somewhere on the left, right there. See that subdivide play up there, but there's no names or there's nothing there.
Yeah. Yep. Yeah, it looks like someone platted in the roads, but didn't really do much with them. That's interesting.
Right. Right. So
might be-
couldn't something like that be done here or no?
Yeah, it could. I mean, to pull a subdivide off like that, though, is not an easy feat. Like when it comes to subdividing, there's so many.
I like not easy.
Yeah, there's so many layers to it that like that could be a 1.5 year long project versus doing a lot split or carving this up into 4 lots could be a 60-day project. You know what I mean?
Right.
And that
Right.
additional yield is just, it's rarely worth it, especially for something like this. This just doesn't seem like the time and place as in the market or the deal to pull something off like that. Usually for like a more major subdivide, we want city utilities already to be at the lot, super flat, partially cleared, things like that. Great road frontage.
Right.
But dude, just the cost to cut in this road. This isn't a huge road, but you know, that could be 10 to 15 bucks a linear foot. I mean, it gets expensive real quick and you got to manage.
Right.
Yeah, I just think it's rarely worth it. It's got to be like just a lay down no brainer for the major subdivide stuff. But this could still be a lot split. I don't love it with the creek running through. If I were to lot split it, I'd kind of want to go like parcel it out like this, just like right down the middle, kind of have a curve to it. But you could look at the comps and see what the difference is if you carve this out. It's like a 9 acre. I mean, a lot split usually doesn't bring a huge yield, maybe 20% at best on a per acre price. Maybe.
And it's interesting that you mentioned that because of the yields. After you mentioned it twice now with the yields, I think it would just make sense just to flip this.
I think the flip is where it's at. I just don't think this property screams subdivide in my opinion. And this is a great little deal right here. And honestly, I think too, in markets like this, people are looking for the 15, the 20s, the 40 acre parcels. This is more of a rural rec market. So as we start to get into the smaller increments, they're just less desirable. Typically, I don't know what this market is, but I would imagine that to be the case.
Okay. Well, I'm glad my underwriting and also with the help of some people behind the scenes and Leo once again giving me a little hand. And then as I ask for another set of eyes from time to time, and it helps tremendously. While I'm still new to the game, right?
Yeah. But what I will say is a boost of confidence, dude. Your underwriting's been on the money. I mean, it's been really good, really good out of the gate.
I take a lot of pride in it. I probably overthink it. If anything, like I'll sit, you know how you tell me when somebody calls, it's like, all right, boom, quick. Yeah. I'll take a little too long at times. I'll kind of just like go over it like 3-4 times. And then I get on the phone with them like an hour and a half later when I should be getting on the phone with them within a half hour. So, but I did want to ask Ace something. And that's what I wrote down.
Okay.
Out of those deals that are you still on the call? You said still on the call, right?
Yeah, he's still on the call.
Out of those deals that you did, because you're doing less mailers than me, right? I'm doing 10,000 a month, and so I guess I'm being extremely strategic with my mailing. So I'm not complaining by any means, but I don't feel like I'm getting the leads in that I should be getting. On the deals that you have, are those all double closes or are these cash closers?
One cash close, the rest are double closes.
Okay. All right. That's what I wanted to ask about the deals with the double closing. Yeah, because again, it seems to me like sometimes, I mean, again, maybe it's market specific. Sumner, you can correct me with this. I feel like there's more double closes kind of going around at this point right now.
Yeah, I'd say it's also kind of in the zeitgeist. It's kind of like what's hot to trot. Like I'd say 1.5 years ago, and subdivides are still popular, but that was in the zeitgeist, and everyone was kind of trying it on for size. So there's a lot of folks doing it, but there's not a lot of folks that kind of like the decision you came to that are going to do it forever, because it's a sticky wick. It comes with a lot. And I just think like anything, it's just a tool to use. Right time, right place, right seller ultimately. But there also are folks like Rylan who do almost exclusively double closes. It just kind of depends on the person in the business. I'm more on the cash close side. We do still a good amount of double closes, but I prefer cash close. But I was gonna say, you and Hassan have got the similar thing going on where you're not overthinkers, but you are methodical, but you don't let the methodical get in the way of you guys getting shit done, which sometimes being methodical and a bit of a perfectionist and underwriting to the 10th degree can stop people from pulling on the levers that drive results. You guys have both kind of struck that balance really well. There's kind of
what's holding me down is I need a VA because it is. I'm interviewing a VA when I get back. Somebody in Leah recommended somebody $550 an hour. I think I'll do it. Listen, I probably need about 40 hours a month. I need 10 hours a week for them to do it, to buy back that time, because honestly, I'm going on vacation Wednesday. As we were doing this, I'm scrubbing, and to do 10,000, and I'm going to all different markets, right? I literally mailed, and that's what so ASIN mailed, I forget how many states. I've mailed now, Jesus, I've mailed at least 10 states.
Wow.
Yeah,
How much mail are
if
you doing
not
every month?
10,000.
10,000. Okay, cool.
Yeah,
Roughly.
just
No, go ahead.
go ahead, go ahead.
I was gonna say roughly how many leads a month are you getting?
That's what I mean. They come in, hot the first 2 weeks,
Yep.
and then it dries up, and then I'm not getting many leads. I'll have like one like now that trickled in. So maybe like 2 solid leads a month, like solid, like close solid, if that makes sense. So I feel something's off.
Yeah.
And my scrubbing's at a 70% ratio. So I do know that I'm scrubbing quality properties, which in turn is going to bring me. I'm obviously paying for it on the front end and not paying for it on the back end because I'm not getting the shit leads coming in because I'm pulling them all out, basically.
Yeah. Yeah, that's interesting. Your average gross for the 4 deals is what, like 40K? What was the pipeline? You said 140,000?
So I got 145K pipeline, but remember my first deal netted 70K. So just for shits and giggles, I kind of broke it down before. Had that not happened, I think my average deal would have been like 20. So 145 divided by 4 is what? So 36,250 on average net, right? Profit after everything. But I think if I would not have done 70 on the first deal, it would have been more like 26-ish, kind of in the ballpark where we should be. Now, one last thing. For every 10,000 mailers, am I right with this, or did I hear the math wrong somewhere? For every 10,000 mailers, it used to be 20 for every 2,500 deals per. I mean, 2,500 mailers per deal. Has that changed?
Well, so no, it hasn't changed, but it depends on the deals that you're doing. So 2,500 per deal usually equates to about 15,000 gross profit on average. So we got folks that are at 7,000 per deal, but their gross is 50,000 or 60,000. So it definitely, it slides and toggles around. But really, to see those averages play out, they're not going to be in real time. That's like a year of data, and then you look back and you'll see those averages start to play out. In the beginning, too, you're never going to be worse than you are now, but it'll start to catch up to you. But you need a pretty large sample size. So I'd say like spread that out over 50,000 mailers, somewhere in that territory. You'll probably see those numbers ring true. It's different for everyone, though. Some folks are at 1,900. That's probably about as good as it gets. Some folks are at 3,000. Partially depends on the markets you're going after, and then really your acquisitions is kind of the big needle mover there.
Yeah, because if I lock this one up, it'll be my 5th deal out of 30,000 mailers, which doesn't sound. I mean, it's good. It'll be my 5th deal, but it just doesn't sound right, if that makes sense.
Well, yeah, but how long you been mailing for?
March, April, May.
Okay,
and my June's going out now.
Well, yeah, so that's the thing, dude. Like, there's deals that either haven't come in yet from those mailers, or there's deals that haven't converted yet that are sitting in your CRM. There's such a latency with mail. Like, we typically don't even get paid back from our mail. What we say conservatively is 6 months. It's usually much better than that. But like, to see the fully weighted results from mailers, I mean, it's really at least a year. We get leads still from mailers that are 2 years ago. So it's just kind of like this. There's a very long tail effect to it. The crazy thing is too, is it takes a deal to make a mailer wildly profitable. And so, yeah, I think
I'm in the black.
Yeah, you're already in the black,
which
is frankly pretty rare given how long you've been mailing. So your results are good in a lot of ways, just from a gross profit standpoint. The ratio does seem slightly off, but I imagine it's a time thing. That's my hunch. But there's a lot of things that could be driving that. Could be the markets that we're deciding to participate in, but I think you're working in the rural markets where I see that ratio start to change. Like the example I gave, I think it was to Arnell, or no, who did I give that example to? Yeah, no, it was Arnell. When you start going after, take like the rural market that's adjacent to Chattanooga or something like that, it's really just boiling hot. Those ratios start to change. So I don't think you're working in those places though. Could be pricing. I think your pricing is pretty airtight though. Would you say your pricing is pretty accurate?
Yes and no. I did some zips. This was a zip and I was way off. Like I said, I mailed her at 140. So honestly, that's probably why I got the phone call, because she made it sound to him like that's the highest deal, that's the highest price she's gotten in a long time.
Yeah.
Right. So I was off, obviously, because I need to be at 110. So I was about 30K off.
Yeah.
So yeah, I would say my pricing is pretty spot on. I do have some deals, like you said, in my CRM. I have one, that the neighbor one that fell through. There's the woman that you reviewed me a few weeks ago, the double lock that's landlocked. She set on her price. I couldn't. She's ghosting me. She responded to my text. I basically gave her an ultimatum, and maybe I should not have done that. I pretty much told her I don't have time to waste, dude. You know what I mean? I told her it's 85. That's the price. I gave her all the reasons why I can present her with 85 as opposed to 101 is what she wants. What I mailed her: A, it's landlocked; B, it has to be resurveyed; C, it was timbered. There's still Dennis brought this to my attention when we were on the call the other night. Not only that, because he tried to call her on this past week's call, and I texted her the next day. Not only is it timbered, but she left all the stumps. So he brought that up to my attention, like those stumps have to come out. That's got to all be mulched, right? So I'd say 1, 2. I say there's probably 4 deals in my CRM that should have technically gone through. So, I mean, if you want to get into hypotheticals, I could be at 9 deals right now.
Be at 9, which we need to be at 12 to make that math work. But again, your deals, you're not going to be at the whatever 40,000 average or 35,000, whatever the math is, but you are definitely above the 15,000. We know that to be true. So, dude, you might honestly, if you maintain, let's just say the average of 25K per deal, you'll probably be like a 3,000 to 3,500 mailer per deal type guy. That's what if I had to guess.
Okay.
But here's the crazy thing, dude. Ultimately the mailers per deal doesn't really matter that much. What matters is what's the ROAS. So 140, 30,000 mailers, data, mail, you're probably at 16 grand, 18 grand for that.
Right. So my mailers, my marketing expenses for the years, just return data tree and Rocket Mail and Print, right? So I 72 grand. I'm at 6 grand, right? 6 grand a month. Yeah, 6 grand a month. Yeah, 6 grand a month times 12 is 72. So basically my first deal put me in the black. So I'm riding on house money basically until March of next year because I'm not scaling up.
Yeah. But let's just isolate the marketing. So for the 30,000, you're paying, what's your per mailer price?
So total, let's just say 6 grand per mail, 6 grand a month per mailer.
Okay. And does that include data?
So that's 3 months. So that's 3 months. That's 18,000 for 3 months.
Yeah. Does that include data or no?
That's data including, correct?
Okay, cool. So 18 grand. So when we talk about ROAS, we're not going to factor in like our ultimate net margin with all the operating expenses, but just gross. If we factor in the data and the marketing, you're not at 10x, but you're not far away. And I reckon the remaining 4 probably don't come through. Call it half probably of that come through. So maybe 2 more deals from that, maybe more. So that the ratio is strong from a ROAS perspective. The yield stuff from the mailers to deals can range. There's so many variables there, but what I really focus on is what's that multiple, what I'm getting paid at.
I'm at like an 8x right now.
Yeah, it's not bad. It's not bad given the fact that you've been mailing for what, 3 months?
3 months.
Yeah.
March, April, May. Now June's going out the door.
That's pretty insane, Mike. I want to give you credit where credit's due, man. I think a lot of people that have been inside of Leah for 3 months can attest to the fact those are amazing results. If I had to chalk out what it is, if I had to chalk that up to, I would imagine it's how you handle the sellers. I envision you being the guy that sits on the phone for 2 hours if you need to get a deal done and build rapport that's as deep as you could go. Is that true or no?
This last deal is exactly why that happened. Grace Nichols is the one that you told me. I in my mind, I'm like, she's not going to take less than 30. She took 25. She told me straight out that I said, are you comfortable with that? I said, if I present you with an offer of 25, I explain all X, Y, and Z reasons why, blah, blah, blah. And she was just, and I really do enjoy talking to these people. And she said that I made her feel extremely comfortable. Yeah. She doesn't feel like she's being taken advantage of. And the rapport those are her exact words. She goes, I feel very comfortable with it.
Yeah. That's it, man. That's it. So I think you're doing great, man. But I do think the math will catch up to you and look better and better. Ray just said he just got a contract signed from a mailer that went out in January. And Ray, you'll even see that get stretched out. It's bizarre. You get contracts from years later.
Speaking of which, sorry to interrupt you. Yeah. 2 of my deals, by the way, were signed contracts.
Just straight to you, huh?
Yeah.
Wow. Well, that means your pricing is pretty damn good. You didn't have to renegotiate them?
I did.
Okay.
I did.
Okay.
I did, but they still mailed me. And that third deal, again, building rapport, he was like, why would you mail me at 31? The one I got at 25. Why would you mail me at 31? And then by the end of the conversation on day 2, he's like, all right, 25 is fine. because we were cool. I told you I shoot the shit about everything. Dude.
That's what you gotta do, dude.
We talked about honey. We talked about freaking him going to see his, and I felt bad. It was a guy who never met his grandson. His grandson's 13 years old.
Whoa.
So yeah, like we were just talking about deep shit, and he's by himself and he's lonely. You know, Jerry talks about that a lot. Like a lot of these sellers are lonely. Yes. And you know what, dude? I'm gonna send him a thing of honey. I probably should have sent it already. It's in title now. Yeah. Hopefully, we'll be closing this week. 2 of those I'm funding because To
Yeah.
me, they're small. For at least for me, they're small. Not that I'm
Yeah.
a millionaire, but 25 and the 30K one, I'm funding both of them.
Nice.
And that's it. So yeah, it's
Yeah.
kind of where I'm at. But this one here, I did the math. If all goes well, and I have a funder that I'm working with on the Pennsylvania deal that I already presented it to him, and he'd be interested in this one, I'd probably make, if we got 200 for it, probably make another 45K on that one.
Dude, that's crazy, man.
Yeah.
I'm stoked for you, dude. You're killing
Cool.
it. You really are
Thank
killing
you.
it. Yeah.
Appreciate it.
And everyone here that's newer or wants to emulate, I'm telling you, it is that shooting the shit, building the trust, building the rapport. The price is not the lever to pull on. It matters a bit, but like you're just talking to a human being, and usually like Mike said, it's an old person that's lonely. So make them feel good, make them feel some type of way. I always talk about like the art of sales is nothing other than just bringing emotion and energy so someone can feel something. Like people just want to feel something, man. Just bring some good energy to them. The world needs it too. So it's our little good that we can do in the world.
Yeah. Yeah.
Any last questions, guys? Anything you guys want me to go through before we hop off here? Anything I can
No,
help
man.
with?
Thanks for going a little extra, bro. Appreciate it.
Yeah, of course, man. Hey, enjoy your vacation, man. Take care
Thank
of
you.
yourself. You deserve it.
Real, thank you.
Anything else, guys?
Sumner, I got one, man. I know we're
Yeah.
over time here, but if I was just to ask you the opposite of the question I asked earlier on, and maybe this is like kind of like the pessimist side, or kind of, well, that's not the right way to say it. Maybe just kind of raining on my own parade a little bit, saying, hey, I know I'm focused on growth and I got this lofty target and all that, but how do I quiet the noise as to, looking at things like, what if all this all of a sudden stops? And what is the one thing that's going to make this thing all kind of, slow down? I think the obvious thing is I got to work the phones. That's something that I know I got to get back on, because I spent a lot of time hiring this person. But what would you say to those of us that are seeing some early success on paper profit, to say, keep the momentum going? Don't let that voice in your head where that scarcity mindset kind of kicks out, and you haven't quite gotten to the abundance mindset of seeing how this stuff really works. Once you're on the other side, you're on the other side. But as you're crossing that chasm, how would you quiet that noise?
Yeah, that's a great question. Something I'm happy to talk about because it's relevant to all of us. Just out of curiosity, that the fear of that little voice, is it as if the opportunity is going to go away or you're going to drop the ball? Like what does that relate to exactly?
Look, for me, it's not about, well, how do I say this, right? It's not like, I'm not worried about me not putting in the effort, because I will keep pounding away at it till my fingers are bleeding, right? I will work myself to the bone. I'm not worried about that, right? So it's not about the work ethic. It's about distractions, and what you said earlier on the call was super helpful. Don't go out, try to build a new flywheel. Just work that flywheel and perfect the one that you got going on right now. The answer to your question is market dynamics, mail saturation, all the stuff that everybody keeps talking about, right? Like, oh my God, everybody's getting mail. And I love it, actually, when clients tell me, ironically, that I got all these offers in the mail. Okay, well, why'd you call me? And what was it about my letter that made you go different? And then I kind of play on that. I say, well, there's a lot of people sending mail, but can they deliver? That's a question you got to ask. And then I kind of double click on that. But it's about people getting a lot of mail. It's about people raising prices. There's people that are outside of the Leah group that are doing things that, one could arguably say is going to muddy the waters for a lot of us. But, such is the reality of the world we live in. That's kind of it, more than anything else.
Yeah. Okay. Oh man, this is such a good question. It's so relevant. I'll tell you guys why. But there's two ways I could attack this. I could attack this on going through kind of the pragmatic side of there's this much land available and it would take this many people to saturate it. I've talked about that before, and I don't even think we can really seek that much comfort in that. Suffice to say though, I mean, this business, but you'd have to 1,000x the number of people in here, and still there'd be opportunity. It just, the bar would be raised. You need to skill up to make it work. Wholesaling is a great example of that. There's 2 million fix and flippers and wholesalers in the US. That's insane. Allegedly, I don't know if that's the stat I've read. I don't know how true that is. I don't even know how they know that. It's an insane number, right? There's 55 million pieces of individual private land in the US. I think there's 1.8 billion private acres in the US. There's obviously a lot of land here. But that voice has nothing to do with the land business. Nothing. This is a phenomenon for every entrepreneur. And I know this because it's in every business I've ever started. This has always been in the back of my head. What if this all goes away? What if the music stops? What if the good times don't keep on rolling? And what I've learned is, dude, I think it's hardwired into us through evolution to always be like, where's my next meal coming from? Living in this place of scarcity. It could get taken from me immediately, and living in that place of survival. And when you get a little bit of success, that gets really pulled out of you. And the truth is, dude, there's no line that you'll ever cross that will go away by more money. You'll feel more fear because the stakes are bigger. The more money I've made, the more I'm like, fuck, what if this all goes away? You know, your lifestyle starts to creep up. There's just a lot that goes along with it. So I think ultimately it's doing the work outside the business and outside like rationalizing how this opportunity is going to be here for a long time to work on the deficits that we all have within ourselves. And that's the beauty of entrepreneurship. It makes us look at our shit. It puts a spotlight on it. And we have to recognize either some of our weird human quirks or some of the stuff that we just got from being children, stuff that was passed down to us. So I grew up in a family where money was very tight, very tight. So it's been hardwired in me to have fear around that. So ultimately, dude, I mean, I don't know. It's something that I still wrestle with all the time. I can't say I have the answer for it, but what I will say is business is not the key. Making more money is not the key. Finding a new opportunity is not the key. It'll always be there. And honestly, again, I think the more successful you become, the more real that becomes. The way I look at it, one, I'm going to continue doing the stuff that's proven to work. That is just a non-negotiable to me. I'm not trying to take Hail Marys. I look at the data and I just keep on doing that. And if the data is not changing, why the fuck am I worried? Unless the data is taking a nosedive, I know it's just wildly irrational. It's just that little negative fear in the back of my head. And that fear is saying that somehow if things changed, I wouldn't be good enough to get back to where I am today. And that's bullshit. That lack of self-belief is bullshit. You wouldn't have gotten into this position. You didn't get lucky, bro. You've got skill and you've worked your ass off. I don't care what industry you're in. You could recreate this 10 times over again. That's why building the meta skills, I want to be able to get rich 1,000 times. If I had to live another 1,000 lives, I want the meta skills that would serve me no matter what world I'm playing in. I want to get rich whatever country I work in, whatever business model. And you've got the meta skills, dude. So fuck what happens in this business. It doesn't matter. You're good. You're good forever. You're good forever. That's why I think focusing on the macro skills opposed to this one little opportunity, this opportunity could all go away, but you could go make $1 billion creating entitlements or whatever. Like this is a stepping stone no matter what happens. So I think that's part of it. The other thing is I try to not link all my happiness to financial success, the progress of my business. I imagine that no matter what the outcome is, if I'm in a good emotional state, I've already won the game. Because the truth is people are trying to make money to feel good about themselves. They're trying to make money to patch some insecurities typically. Of course, you've got to survive, but anything in excess of that, all the entrepreneurs I know are fucking broken. Like they're dealing with some trauma and they're using business to solve that trauma they haven't resolved in themselves. And so if I can keep myself in a good emotional state, I don't care what happens here. I'll always be good. And I don't know, man. I don't know if that's even the answer. That's how I rationalize. Yeah, like,
dude, you just so
It's brilliant.
oh my God, yeah. It's interesting you mentioned that because what you just said about some entrepreneurs that are just like broken. I ain't gonna lie to you, dude. That I got some severe PTSD from shit we've been through, right? My wife and I with our son. And my thing is, and I said to my wife a few nights ago, I'm like, on the surface, I'm okay. Like, if you look at me on the surface, I'm good, but I'm actually stressed out, right? Beyond stress. And I said to her, I'm like, this is fucking great. I'm making money, right? I said, between your salary and what I'm bringing in now is probably more than we've put together in the past, 13 years we've been together. But at the same time, I'm like, I was talking to another Leah member that I confide in a lot outside, back in privately. And I'm like, I need a VA because I'm fucking stressing myself to the point where it's like, why am I doing this? Am I going to make myself sick? You follow what I'm saying? So
yeah,
it's gotten to that point now where I'm like, I have to find that balance.
Yeah. Yeah. Well, dude, I think the secret ultimately is longevity. And I think we either burn ourselves out so hardcore that we can't stay in the game long enough to see the massive results. I don't think Warren Buffett became a billionaire until he was 60. He'd been investing since his late 20s. Like to see things compound, it takes a while. Or what Asana's saying, we psych ourselves out and we say, competition's coming. I'm going to go do this other thing. I see this all the time. People are like, I'm going to go do infills or subdivides, but the data's not telling them they need to do that. It's just they get in their own head. They're always trying to stay in front of the puck, and you don't need to, So yeah, I think there's truth on both ends. All we got to do is just stay in the game. Everyone's going to be good. Just stay in the game. Don't get in our own way. And that's easier said than done, obviously.
Yeah, hate him or love him. I'm not going to get into politics, but Donald Trump actually had a great thing one day. That probably the only nice thing that I've heard him say not too long ago. We also no, it was a while ago. Interestingly enough,
Yeah.
he said he knows some of the greatest people that if they just would have stuck it out for a little while longer, some of the greatest minds that could have made billions, and they just didn't stick it out long enough, and they failed, right? And he brought this up wherever he was speaking. I forget where it was, and it was interesting because it was spot on and so true. He said if they just would not have given up, they were this close to making it. And it's interesting because that's what you're talking about. You're talking about people who just they don't stick with it long. But on the flip side of that, it helps guys like us on myself, Ray, all of us. It helps us because you do want people to. I know it's going to sound really fucked up. You do want people to fall out of this business as well.
Yeah, and people do
So,
at an alarming rate in any business, but I see it here.
right.
It's dude, it's tough for a lot of reasons, not land, just running a business in general. And like I said, it really puts a spotlight on your deficits, and some people just aren't ready for that, you know? Like you've got to, I mean, look at business isn't the answer to life and it doesn't solve all your problems, but man, it really, you've got to level up in so many regards. It's unbelievable. You are the common denominator for everything in your life, but you really see that in business. And not
Dude,
every-
I've grown so much in 3 months. I'm sorry.
Yeah,
My
isn't that
wife has
crazy?
said it. My wife hears me on the phone because I work out of our office here in the house. She comes home. She hears me on the phone now. She's like, do you know where you were 3 months ago? She's like, I hear you talking to people. She's like, the verbiage and what you're saying. And like 3 months ago, she's like, you were like reading off a script. And she's like, now, you're like just going with the flow. And she's like, it's like night and day.
Yeah, it's crazy, man. It's crazy. And that's the cool thing. Like I'm obviously not the most successful person ever, and I haven't done that much in the grand scheme of things, but I've built a couple businesses along the way. And it's like they've all been in different domains, but you build that meta skill and it sticks with you forever. So Mike, if you were to do something else, I guarantee you've already got a leg up no matter what it was.
I plan on it, and it's funny as I mentioned that because I think in this business, and I'm not saying that you should. I'm not saying that you can't make land your specific goal.
Yeah.
I hired a YouTube guru prior to this. I don't know if I ever told you the story. I paid $7,000 for a guy on YouTube to do laundromats. You probably heard him, King of Laundry.
Yeah.
He's the biggest douchebag in the world. He's a narcissist. He's an asshole. I hired him. And you know how you do it though? It's wild because I plan on doing it.
Yeah.
I was scouting laundromats in the Bronx, in the ghetto, right? You go to the most rundown, beat down laundromats. I was going incognito, doing laundry, taking pictures, and you go to him, right? You find the landlord. You hire him to negotiate for you with the landlord, say, hey, this laundromat and whatever in the South Bronx is underperforming. We went and we scouted it. We own X amount of laundromats. Tell you what, how many years do they have left on their lease? If it's a year, why don't you consider bringing us in? It's called, free laundromat, because what happens is you pretty much go in, you don't buy an existing laundromat that's being beat down. You go and sign a 15-year lease with the landlord, and then you go in and retool the laundromat. You put in maybe, let's say, 30 new washers, 30 new dryers, it costs you $300K. And then there's a 7-year 100% depreciation write-off on the equipment. So there's big money in it. So that's what I was going to do until I almost got killed one Sunday. Serious story. No, I walked out of this laundromat, and about a half hour to an hour later, I watched the news, and my wife was like, isn't that the laundromat you were looking at today? There was a full-blown on a Sunday afternoon shootout right in front of this laundromat, like 4 people shot.
Oh.
Yeah. So because unfortunately, it's laundromats are in poverty-stricken areas, right? But there's hard working class people that are going there. Unfortunately, they're surrounded by an element of, the projects and the ghettos and stuff like that. But it's a great business. It's a great cash business. It's like a 35-40% ROI on it. So where I was going with this is you got to diversify, I think, in this business as well. You have to have some other things, I think, on the side.
I agree. I mean, if getting wealthy is the goal, ultimately, I think you need a vehicle for cash flow, which this is that, and you need a way to go park that money somewhere. And
Spot on. Bingo.
Taking the game long enough and amazing things will happen. So, Son, I hope that answers your question. Truth is, everyone wrestles with this, though. I don't think it ever goes away. But I can guarantee you, I was just going to say, no stat in the business will resolve this, and no amount of money will make you feel more secure.
Well, look, Sumner, two things, right? There's not a single thing that you have said to me or on the calls or Discord, or I've heard from you, for that matter, the other coaches as well. But specifically, as you and I are talking, or we're talking here with you, there isn't one thing that you've said, as long as I've held up my end of the bargain, that hasn't come true. So that gives me a ton of confidence and trust, because you've done it yourself, and you're not coming from I mean, you're speaking from experience. You've done it yourself, right? So that resonates on multiple levels. I like the approach in general, which is so unbelievably down to earth and helpful, right? It just resonates on multiple levels. So on a personal level, tremendous gratitude for all of that, Sumner.
Thank you.
Thank you. Absolutely. And I mean, it's more than well deserved. And that's the least I can do, is to express gratitude on teaching this old dog some new tricks here, right, to slay in the game. But the one, if you're what you're saying about the data telling you one thing, absolutely, that's something you tend to lose sight of, because your subconscious is like a high-powered attorney that argues against you, right? And it's just like you got to shut that shit down in an active way to say, you got to quit it, because the case is being made in the opposite direction based on what the data is telling you. One. Number two, meta skills. I appreciate what you're saying. I think that makes a ton of sense. And if there's any doubt for anybody on this call or anyone who might be listening to this later, for those of us, and I'll speak to myself, my own example, kind of what Mike was saying earlier as well. 6 months ago, 7, 8 months ago, I knew nothing about this business, right? And we got to a certain point of pipeline profit. It's still pipeline. It's not fully realized. But if that's what you can do from a dead stop to now, right, then the meta skills already are something that'll just take you, if you keep doing what you're doing and you project the math in a logical way, not in a critical way, then the trajectory should be on a 45-degree angle on the top right corner of the page, getting you to the top right corner of the cage. It's not going to go all of a sudden nosedive, right? I mean, if that happens, then we got World War III, and we got obviously much bigger problems. So that's all I'm going to say in response to what you've kind of shared and some of Mike's comments here.
Yeah. No, it's spot on, man. I love the high-powered attorney subconscious. I'm going to steal that one from you. But dude, that's a great question, man. I'm glad you asked that. I think it's on everyone's minds. And if it isn't yet, it'll catch up to you and it will be on your minds. Always a treat. Always love these calls, man. Love hanging out with you guys. It's always a blast. Wednesday, 12:30 p.m. PST, we'll be here. Mike, enjoy your vacation. Everyone else, take care of yourself. Thanks for everyone. Yeah, thank you for being here, guys. Appreciate it. All right, bye. Hey guys, I want to let you know that inside of Leah, that is our 12-month group coaching program, we have added a 6-figure guarantee. That's 6 figures in gross pipeline profit in 12 months, or we will work with you until you get there. Now, that is not a guarantee that you will hit 6 figures in pipeline profit in 12 months. No, that is a guarantee that we will get you there no matter what the timeline is. Might happen in 3 months, might happen in 6 months, might happen in 24 months. The guarantee is you get to plug into our system, which is essentially a business in a box for land flipping, and we will scale you to 6 figures together. And if we don't do it in 12 months, we will work with you for free until you get there. There is no offer out there that provides a guarantee like this. Will it be challenging? Absolutely. Will you be tested? Absolutely. But if you think you've got what it takes and you're ready to build a business that changes your life in 2024 and beyond, I want you to go to landinvestor.co/apply.